Hello, Graham.
I don't know why my microphone is not connected.
Well,
Tell me,
we hear you.
you can
Yeah,
hear
we
me?
hear. Yeah, we hear you
Well,
fine. So,
Well, it says
some
go through
microphone
my
is connected.
computer, not my actual.
oh, gotcha. Dan, Luann, Mike, Jeremy, Joshua, Faith, Joe. You weren't able to be on Thursday and Friday. Me neither. So we're in the same boat. Hi, Harold. Hey, Hank, Joshua, and Stacy. Brandon, I know it's funny, Brandon. The last time that I took a trip, um, was we went to Pebble Beach. When was that? I forget. It wasn't Liberation. It was the start of the March collapse. Before that, I left on a flight, checked in the morning. The markets were literally down like 3%, and I was thinking, geez, I can't leave. The market just goes crazy every time I'm gone. Maybe I should put a put on. Just throw a couple puts on the SPY the next time I'm going to be out on vacation because it seems to be like clockwork that we get nice big flush. Hey, Rock. We got Paul, Bob, Johnny, David. Hey, Nate. Hey, Johnny. Linda, Keith, and hello, hello.
All right, I don't know why I cannot get this.
It actually sounds pretty fine. I don't know if you're probably getting echo back through on your side, but
Yeah.
sounds pretty decent on our side.
Hmm. That's good. I
But
HD Web Pro, it can't be that. Um, yeah, Harold talked about the puts on the QQQ. Nate, you were gone, but remember that insurance play we did?
yep,
They were up like 150% on
yeah,
Friday. Now they're up 25%. So I guess I can't complain about being up, but I'm just letting that ride just in case. Now, today, holy guacamole, markets are red hot, bouncing
yeah.
back.
It's a little. No, I'm just gonna warn you guys ahead of time. I'm gonna give you a couple stocks. Yeah, they're already late to the game because the market just ripped so quick, so early. So I had this set up before markets opened. Obviously, that happens sometimes. So I'm going to give you things that are frankly already a bit out of date here. I mean, Tesla's already up $7. That was the high risk play I mentioned in Telegram. So a little unfortunate there, but we'll still grind through it. Nice to see Apple pop back some after that big beat. I have some income plays on Apple, and seeing those back safely in the money is always a good thing when you've got one of those that kind of drags below, which is actually one of the questions that I want to mention as well as we go through. So we got a lot on the board here for you today. I'm going to talk about just where we are in the market. Again, a little outdated, but we'll talk about that. I want to give you an update on the test that we've been running, kind of the daily optimization idea. I've got a couple more things that I'm going to be testing there, but just wanted to give you an update where we are right now in the current rules, plus a little bit of a surprise that I found there in terms of the testing. A couple kind of snapback stocks that I like, that Tesla trade that I mentioned, and then a couple questions that I've been seeing hit my email inbox a little bit more lately, and just kind of cover those in depth here. So a lot there, but we will grind through that today. And if you guys have questions, feel free to use the chat there. You can open it up to everyone if you want. That's the little blue box right above where you're typing, that little blue box. You can click the everyone button there if you want everyone else to see your chats. Obviously, just be respectful. Don't share information from paid services, all that sort of stuff. But otherwise, feel free to use that everyone button. All right, let's jump right in. Happy opening playbook. Happy Monday. Let me actually get my chat back open here on the other window. All right, there we go. So let's talk about where the market is right now, which doesn't exactly look like this because of the big gap up that we've already got. So this is the weekly chart here. We mentioned volatility coming back. Boy, did volatility come back with multiple Huge days happening in just the last couple of days. Pretty decent sell-off there, obviously on the weekly chart. And we're going to kind of center back out so far today. Actually, let me take a quick look at it. This is on the QQQ. Let me just take a quick look here. I'm sorry, I'm saying QQ. That's on the SPY. Sorry, guys. Talking and typing at the same time. Never a good move. All right, let me look at it right now on the SPY and see where the weekly chart actually is. All right, here we go. There we go. So you can see this is the weekly once again. Got the flush last week. We're already right about that center point. So the question we have now is this just kind of a pullback within the flush? Because we actually have seen that several other times, and we're going to get a rip back down. I think the 608 level, which is the one you see my horizontal line, the previous highs, is kind of our first check if we're going to get a deeper correction. And then obviously if we break that, it kind of opens up a serious, like a 10% type of correction. Now we have seen, if you guys are looking at this chart, several times where we've just got these kind of couple percent flushes and moved higher. I mean, there's the break here where we moved higher, the one here where we moved higher, but we've also seen, this is a weekly chart, so we've also seen when the market turns, multiple weeks in a row of bearishness. So nothing confirmed yet. This could certainly be just a one-stop shop for a couple percent and a move higher, or this could be kind of a centering out and then a move lower. And I think we want to get through the rest of earnings here to kind of get a solid basis for where the market is headed. I think right now, this is not going to be just a technical driven move. This is going to be a lot more likely to see how did the rest of earnings go and how do we react to that. Now, what's interesting here, at least to me, is that this is probably not the pullback that I would have expected. So if you look here across our sectors, and I just slide this a little bit this way to kind of see more of the corrective move before today, what we saw here on this flush was not technology and discretionary dropping 10% and everything else middling and defensive stocks being up 3 and 4%. Really, we saw a very diverse pullback, which I would not have expected based on where we were in the market and communications and technology being up so high. We saw communications and technology kind of being middle of the pack. We saw basic materials taking the biggest flush across the board, and then really just kind of a normal rotation with industrials, financials, discretionary being down 3.5%, energy being down as well, utilities being the most counter trend. And then as you look what happened today. Did the sector that was the most counter trend during the flush flip back and redirect? No, it's actually still up even as the market moves back up today with technology and communication. So this is really not the kind of flush that I would have expected. And it actually makes me, I would say, more net positive. So if someone asks what time frame, this is the last 5 days. Okay, the last 5 market days going from July 29. What we see is, again, a very interesting mix. Energy's down, discretionary's down, financial's down, industrial's down. Technology, which you would expect to be the biggest negative, but wasn't because of Microsoft beating earnings and things like that. And then staples, which you would think would be up to 3%, kind of middle of the pack. Communications, which you would think would be at the bottom, again, Meta beat. They remain healthy. And then utilities, not only being up while the rest of the market was going down, actually staying up today and being positive. So a really interesting, diverse mix of sectors right now, which I think is probably a net positive thing, meaning that we're not seeing technology start to turn and be really aggressive, negative, and pull the whole market down. We're seeing a much more balanced approach than that. So that's how our last 5 days have gone. So again, the major theme to me isn't trying to predict whether we're going to get the immediate pop back or a deeper correction. I think the main thing is volatility is back, and we want to look for ways to trade that volatility and handle that volatility. And one thing to keep in mind, Graham's been talking about this a lot lately with the dollar trade, things like that. When volatility is back and you can structure trades the right way, most people now are overpaying for directional positions, right? because volatility is back. That goes right into the option pricing. Well, if you can trade in a way where you're not paying premiums for that directional move, it makes getting 0.5% or 1% type moves so much easier when the entire market is moving this aggressively. So, you're trading Apple, it's up 2% today. You're trading Microsoft, it's moved 3%. Those kind of trades become a lot easier in this window. So as long as you're not paying the super high premiums for those directional moves, it should be an advantage to you. Okay, let's move on. So we've got, this was our crazy test here that I started, I guess about 2 weeks ago, just walking you guys through some of the different structures that we use and why we use them. For those of you who are new, we started with a test over the last 10 years. So this is going from 2015 to 2025. And what we did is we started looking at what if you were just trading options directionally on the SPY over the last 10 years. The last 10 years have been very good in the broad market, so you should be up, right? Well, we started just, what if you took a call option every week? Or what if you took a call option every day and you just look for the market to go up? And I think our best test on regular options, if you see here, the starting capital at 10,000, I think our best test was like 10,000 to about 90,000. Well, then we switched it to spreads. What if you started trading spreads, every week or every day? Then we got from about $10,000 to like $250,000 or $280,000. Then we did our favorite, or at least my favorite secret sauce, which is putting a target on those spreads. And then we got like over $1 million. And then we optimized a little bit more by taking the trade every day, taking it at the end of the day, and then using a decent target, which I think was a 30% target here. And so this was the last one I left you guys off of, the last 10 years, going from $10,000 to $1.3 million. And by the way, the max drawdown here was 29.9%. So that's actually a lower drawdown than the broad market itself over that same time frame. So if you were literally just holding the SPY, you would have actually made a better drawdown in this, less capital drawdown, than just holding the SPY or just trading the options. Okay. So summary of that most recent test was $10,000 to 1.3 million, 29.9% drawdown, 91.4% win rate, average hold of 21 days, and then that Cager stat that we've been talking about a little bit, 62.8%. So let me just pop those in the chat just in case you want to reference them as we go further. We will talk about folks who got exercised on Friday. Now, I don't recommend letting stocks expire on Fridays between strikes unless you really want to own the stock, but you did luck out if it happened to you this Friday or last Friday. If it happened to you last Friday, I'm sure that you opened today with shares that are up really nicely that you can close for a profit. Like Cal mentioned, he let a Tesla trade, wasn't paying attention, let it expire between the strikes. That means he owned Tesla shares, and that worked out really well, kind of luck of the draw this weekend, but typically you wouldn't want to do that. Okay, so again, here's where we left off, 10 to 1.3. So here's an update for you. This is 10,000 to 3.6 million. Now, the crazy thing about this isn't that we tripled the ROI. That's nice. It's that we actually went way down in our drawdown while tripling the ROI. So that's really the beauty of this test, is now you have a drawdown that's less than half the drawdown of the regular S&P over the same time frame, while also going for about triple the ROI with 3.6 million. The other thing that I really like about this test is the average days in the trade here, which means you can recycle your capital really, really nicely, because your average days went from 21 days to a third of that, 21 days. So just to look at the comparison here, 10K to 1.3 from was the first one. Now 10 to 3, 29.9% drawdown, 13.2, 91.4 to 91.6. Notice the win rate didn't really change a whole lot. Average hold days 21 now to 7, and then our cager here 62.8 to 80.5%, which compounding over 10 years is what gives you that big advantage. Now, this is really nice. We went from, again, 1.33.6 with a lower drawdown. I can't really say enough about how great that is. But to give you a true update, it might be more like 10,000 to 2.1 million instead of 3.6 million. So that cost us $1.5 million. Any guesses on what update I made to cost us $1.5 million and increase our drawdown? I made a slight update in our test here that damaged our cumulative gains by a massive $1.5 million. Any guesses on what that update was? Lisa says stop loss. Any other guesses? Sam says stop. Jason, beginning of the day versus end of the day. Good guess. Cynthia says you went on vacation. John, no. Conditions, profit level. Okay, we got some guesses here. Interesting guesses.
Volatility.
Yeah, some good guesses there. So interestingly, every single parameter on this test is exactly the same, except for I added a 30-cent commission per side to the trade. So I gave us a more fair test by adding commission, and the commission over 10 years cost us $1.5 million in profit. Pretty crazy, right? And the reason is because it affects your compounding and everything else. So it's not like we paid 1.5 million in commission. We probably paid a couple $100,000 in commission, but because the commission also impacts your compounding, it in total cost us $1.5 million on our test, with every single trade being identical, simply just adding that commission in. So pretty crazy thing to think about there. It makes it, that's why I go to my broker every single year, sometimes twice a year, and say, hey, can you give me a better commission rate? What can I do? I might have to switch brokerages, all that kind of stuff, because are brutal over time, even with a really effective strategy. Now, some people will say, okay, well, you should probably switch to Robinhood or some of the other brokers that have zero commission, and then you get your 3.6 million. I think the problem is what I have seen is that they kind of price that out by making the fills on average a little bit more expensive. I don't have any guaranteed data to back that up. It just seems like for my member, even when we're in large or we're in trades together at the exact same time with the exact same targets, I often see people on Tradier or Robinhood close later. And so for me, if you are going to trade off whether you hit more targets or save commission, then you're going to want to side on hitting more targets over time. That's going to be the more effective trade structure. So just worth noting there how massive of an impact that is that I think most people maybe don't always account for. Okay, so the rules of this trade. We are buying the SPY or the SPX debit that says every morning. I switched it because the afternoon tested better. Every afternoon at 3:45 p.m. Now, you could do it at 3, 3:30, 3:45. We're not talking about major differences there, but 3:45 p.m. is this test. Now, I did change these, and I'm going to do some more optimization on this, but this was interesting to me. Going out of the money just a tiny bit had a huge impact on our ROI. Now, there's reasons for that, right? Because if you want to hit a target and you start in the money, it's going to be a little bit harder to hit that target on an asset that does move directionally versus if you go a little bit out of the money. In other words, if you go out of the money, actually, even if you wrap it and give it just a little bit more upside out of the money, but in this case, both are out of the money. What that means is that on a directional trade, you're going to be able to get into that target range more quickly. So like this 20% was easier to hit starting out of the money. Now, if you're doing an income trade where you're actually not expecting the market, to move, you just want it to be flat and make money, then this would not be the case. But obviously, the S&P is directional over the last 10 years. So going a little out of the money was a really big advantage. Now, what if you go 0.2, 0.3? What if you go 1% out of the money? Well, you pretty quickly get over the curve where you're going too far. And now you're hurting yourself the other direction. So this is the sweet spot so far, but I'm going to continue to do some testing. But just very interesting to notice that a little bit out of the money was a big, big advantage on a directional asset. Expiration is still closest to 60 days. So every day you're opening up, you're looking for the closest to 60 days. The allocation, which someone asked, I did 1.5% per day. So if you're trading the SPY and you're trading, or the XSP, and you're trading one contract and you've got a $10,000 account, you're probably trading 2 contracts a day. You're risking about $150 per day. And then as your account builds, you're risking a little bit more. You're eventually going up to 3 contracts, 4 contracts, but 1.5%. The target here was set at 20%. That's what kept our win rate really high and our drawdown quite low. And then our max open trades, I adjusted here and went with 8. That meant that I have about 12% of open liquidity at risk, right? Because I didn't want to have 30% of my account open at the same time. I wanted to have a max. So in this case, that puts us at 12% max open at the same time. Now, personally, you guys could take this and start trading it. I wouldn't recommend it because I'm going to optimize this further. I'm going to give you some better numbers here pretty shortly for this portfolio strategy. But you could go start trading this right now if you wanted to, and the numbers are really, really good. So that's the kind of the portfolio strategy. David, yes, I'm a mechanical guy. Pretty much everything I do is mechanical, systems based, mathematically based. I'm not a big, forecaster, predictor. I'm not an instinct or go with my gut trader. I have a couple of those from time to time, but that's not foundationally the way I trade. That is correct, Jason. You would close the oldest trade so you would never stop opening trades. You would simply close the oldest one, then open a new one. That is correct. This would be SPY, SPX, or XSP. Yes, XSP is valid as well. All right. So one of the trades that I liked was taking another stab at Tesla because pretty much every time it got down here at the lower end of the range, we've seen some rebounding. And so the trade I was going to give you here was the August 14th, 310, 315, not 14th, 15th. This was the trade I wanted to give out, but I think we've moved pretty far. Let me pull up and just see kind of where we're at here. I'll move this out of the way for a second and just see where Tesla's almost already at my 310 level. So this is not going to be a huge ROI. It'll still be nice. I mean, still well over 100%, but it was going to, we probably would have been up 50% on the trade already if we were able to get this at my current price. But I'll still give you the pricing on this if you guys like it. Let me just pull that up. So this would be the 310, 315. You could still get in for 225. So you still have over 100% of profit potential. Now, the reason I don't want to just move my strikes up and go for the 315, 320 is because that kind of gets us into the top end range. And what I wanted to do here was kind of keep us within the middle range and still be able to get a nice ROI. So if you guys like this trade, I don't like it as much as I did, an hour ago as I was looking at it pre-market, but still, I think Tesla has a pretty good chance to pop toward the top end of this range. I actually think it's going to break out higher at some point, but I wouldn't trust that trade in just 2 weeks. I would want a little bit more time advantage for that trade. So if you like that one, that is on Tesla. Again, kind of just needs to get in that middle range. And let me go ahead and put that in our trade sheet here. for those of you who are opening Playbook VIP, you paid your dollar. Then I will get this in the trade sheet here. August 4th, 2025. Snapback trade. All right, that is in your trade sheet for everyone, for all the VIP members as well. Now, if you guys want to do a target on this, you could set a target at 450. Just target a clean 100%. If Tesla kind of gets a pop way up into the 320s, will very likely get us, into that, $4+ range. So you can do that. If you want to get the, full profit potential, you got a little bit more profit potential on that by letting it expire for a full potential $5. Yeah, I mean, Musk got the court ruling. I think it's probably a net positive for Tesla that he is fully engaged and invested, frankly. But we'll see. That's on Tesla here. I guess I should put Tesla in my trade sheet because I don't have it on the screenshot here. Tesla. Okay. All good there. So some other snapback trades that I like. Again, some of these kind of moved on us a little bit already because the market opened in a huge way today. Anyone know what CCJ is? How it opened? Let me see. I haven't actually looked at it.
Up 1.5.
Okay, so that's not a huge move for CCJ. I think it's still relatively early. I guess my thinking here on CCJ is that all the fundamental reasons that I still like nuclear and all that kind of stuff haven't really changed because of a flush or an earnings, soft earnings, because their earnings weren't soft, by the way. Their earnings were actually very good, but they got kind of that negative move on earnings. So I like CCJ as a potential snapback. Again, lots of different ways you could think about trading this, guys. You could trade CCJ in a similar way where you take like a debit spread and target somewhere around the middle of this move, like a $75, $76 jump trade where you could target 300% over the next month. You could buy CCJ. I'm still holding it. You could, buy calls if you wanted, although you're going to pay relatively juicy premium. You could just trade it kind of at the floor right now and say it's at least going to grind sideways. You could put it in the income machine and be more defensive because it already took the plunge. Now you have some extra cushion. So lots of different ways here. But I think CCJ, again, still a great, a well-positioned stock that has still plenty of upside. Still have lots of fundamental reasons why I think nuclear is going to power both AI and other, major energy shortages across America. So for all those reasons, I like it. It's a monster trend. As you can see, it does have deep pullbacks. So, lots of volatility within CCJ, but one that I like. And like I said, is potential snapback. Here we've got AMD, obviously going right into the teeth of the tech stocks. And a super strong trend, still trying to catch NVIDIA and ABGO. AMD was ripping, had that little pullback. I think, let's see, let me plug in. Oh my goodness. Okay, well, never mind. AMD's already at 177. All right, well, you can ignore AMD.
Well, I don't know. They have earnings. They have earnings tomorrow. I'm very curious what's going to happen there. I just bought AMD in my retirement account, actually. My very speculative retirement account, that is.
Yeah. I like AMD. I think, like I said, it probably going to crack to new all-time highs and lead if we get some momentum here, but already up 3% or something today. So maybe hold off on that one, but probably I still like it to hit $180. With earnings, you're kind of playing a little bit of a gamble there, but we'll see how it reacts. So far, the big tech stocks have done pretty well on earnings. So we'll see if we can continue the momentum. I think earnings like we have right now are a great indication of where the market's at. Does it buy into these big time earnings, or does it sell them off? Meta, Microsoft, bought into them, love them, then sold them off. So we'll kind of see where we go from here. And then here's an interesting one. ROK. Graham, have you ever traded ROK?
What is that? No, Rockwell
Rockwell?
Automation? No.
Yeah. So a monster stock that I've never traded, but popped on one of the screeners today. Dropped down here again. Good earnings. Dropped down, kind of based right around 340. I haven't checked this one today either. I don't know if it's up or down today, but looked like a monster trend and one that I might kind of keep an eye on as a super high performer. So check out ROK. Interesting stock there. Now, speaking of scanning and screening for stocks, I don't know if you guys have used this before, but I was messing around with it, doing some things. The TradingView stock screener is really nice. So you can actually use it for free. And I think it is a really nice one to use. So let me just walk you through a couple things here. And if you guys want to check out the TradingView screener, create some screens, mess around. Let us know if you find anything interesting using it. I thought it was really nice. So what they have is a ton of different areas where you can filter and do different stuff. So on the indexes side right now, I have S&P and NASDAQ stocks, but you could look at the Russell 2000. You could look at all the exchanges. I mean, you can get thousands and thousands of stocks here on TradingView. They have, price filters. They have percent change filters you can look at. You can sort by market caps so that you're only getting big stocks, or if you want to do small stocks, they have lots of fundamental things that you could do here. If you guys like dividends and you want to specifically build a screener for dividends, you could do that. You could sort by sector and things like that. You could go to performance again and look at that. You could look at analyst ratings, all kinds of different stuff here. One of the cool ones, by the way, is beta. So if you want to look for stocks that move high, you go and look for stocks that are at a 2+ beta, and you're going to find some really interesting stocks that you could look to trade. Naked puts if you like the stocks, or credit spreads, or debit spreads. We're going to get juicier protection. Of course, none of the names right up top are surprising with Coinbase, Block, Palantir, Nvidia, Shopify. A lot of good names there. So if you wanted to look for stocks, for example, that had really high beta over 2, but you also wanted, say $200 billion and above, so you wanted big names that still had beta. Well, look, you're still going to get a couple stocks there. Maybe you want 10 billion to 200 and 200 billion plus. Well, now you're still going to get some good names that have lots of volatility and still lots of liquidity. So some pretty cool things there that you can do with this scanner. Now, what I really like most about this TradingView tool is this performance tab. This performance tab is really cool. So if you go to the performance tab, what you'll see here is 1 week, 1 month, 3 month, 6 month, year to date, 1 year, 5 year, 10 year, all time performance. So you can really mix and match some of these. By the way, Graham, obviously we talk about stocks that have crushed all over time. This is a pretty shocking way to look at it. So if you just look at performance all time, and let me get rid of this. There we go. I mean, wow. Take a look at how many stocks are up 1,500,000, 400,000%, 395,000%, 198,000%. Just incredible. The amount of stocks. I mean, you scroll down and you're still way down here getting stocks that are up 30,000%, 32,000%, 28,000%. Just amazing to see how many insane performers there are over time. Now, what's cool about this dashboard is you can look at all time, but then you can kind of compare what have you done for me lately. And no surprise here, look at the stock that's most consistently green just across the board. It's up 1 week, it's up 1 month, it's up 3 months, it's up all the time. Microsoft, has really become the king here. What's the other stock that's green? What do you know? Nvidia.
And an interesting one on the flip side, I saw Adobe in there, and it's the inverse. It has a really great overall number, but we all know that Adobe has really been struggling.
Yeah, yeah. So the biggest market caps in the world, Microsoft and Nvidia, just green across the board. Oracle is in that as well. Oracle, I know as a top performer, not a surprise to see it near the top of the list, but I wouldn't have guessed quite this good, to be honest. I wouldn't have guessed that it's kind of neck and neck there with Nvidia. I mean, it is right there. Obviously, nowhere near market cap, and doesn't have the recency bias that Nvidia does. But overall, a pretty insane performer and has been picking up. It's actually in the last 3 months crossed back and has been beating Nvidia in the last 3 months, which is interesting to see there. So again, I really like this performance tab. One of the things that I think is interesting that you can kind of do here is you could go and look at a 6-month descending. So you could go look at what has the stock done in the last 6 months, look for some really top performers. SMCI, which I sold recently but was holding, got a really nice 70 or 80% gain from buying it at the lows. It's green across the board. But what you can do is you can scroll down and look for something, speaking of those snapback trades, that might be down a little bit or break even, like Hershey's or Uber or Warner Brothers, WBD, or some of these other ones, Boeing, that have for the last 6 months have really great performance, but maybe just the last week or two have dipped. JCI, Johnson Controls, the buddy that I played our member guest with, which is why I was out last weekend. He worked for Johnson Controls, so maybe I should short his stock and tell him. But you got a lot of companies here that have really great 6 month, 1 year, but have slowed down a little bit, and those could be opportunities to make a comeback. So just a lot of different things, but I really liked this performance tab here on TradingView, where you can get a really nice idea across different time frames, and then you could obviously whittle down. Is anyone, before I flip back, what we're going to do next, we're going to cover some of those questions I mentioned. I've been getting some really important questions in my inbox. Actually got a couple of them already in the chat today. Before we move on to that, anyone want to see anything in particular on the screener here that while we have it up together? Looking at dividend stocks that are also performing high, or high beta stocks that have a lower market cap, or anything. I'll give you a minute. Just if we want to spend a couple more minutes on this screener, if you guys have anything you want to look through. Other than that, we will actually get back and cover some of those questions we talked about earlier, like what happens if I do get assigned earlier, or what about some of the lower options volume. All right, I don't see any major requests coming through the chat, so let's move on. We can always flip back to that here in a minute. But like I said, that tool is free. You'll need the free account on TradingView to check that out. I don't know if you get all the same options. I have the paid account, so I'm not 100% sure if you get all of the same options there on the free as you do in the paid, but I think you still get quite a bit with the screener. Okay, so let's cover some critical questions that I've been getting in my inbox lately. If you have asked some of these, then hopefully this is helpful. But I'm sure if I'm getting them in my inbox, that they are also questions for other people, from other people as well. So the first question is, what happens if I am assigned early on a debit spread? Well, this is actually the best case scenario, because it means you can exercise. Whoa. See, I got my bot. You can exercise your bot call and generate the full profit potential of the trade. So let's do an example. This is actually one that I had. You buy to open the $77 Wells Fargo call, and you sell to open the 79. Now, I didn't put an expiration date in here because the expiration doesn't actually matter. In the use case, we're saying if you get assigned early. So this would be a typical call debit spread for us. You're buying the lower, you're selling the higher, you're paying a net debit. Maybe you're paying $1. If it's more of a wrap order, maybe you're paying $1.50. If it's more of a protective trade, but either way, you're going to pay something for the trade. Well, then what happens? you're waiting for the trade to expire, but you might get a message from your broker that looks something like this. Again, this was a real one that I got. Our records indicate 10 contracts of your short WFC, that's Wells Fargo option, has been assigned in the account listed above, right? So what happened was I was assigned on the short call that I had on Wells Fargo, which means I was forced to sell 1,000 shares of Wells Fargo at $79. All right, let me pause there for a second. Does that make sense to everyone so far? Remember, the trade is I sold the 79 and then I got this message, which means I'm selling 100 shares per contract. So that, in other words, that is requiring me now to sell 1,000 shares of Wells Fargo at $79 because that's what the short call side means. Okay, good. Yes, yes, yes. Good, good, good. Okay. Now, the scary part here for most people is that you might have a small account and all of a sudden you have this huge short position in your account. And so that's kind of when people freak out. They think, oh my goodness, I'm short 1,000 shares. I have a $79,000 short position order on a $5,000 account. What do I do? Anyone ever been there? Give me a yes in the chat if you ever been there. I remember the very first time that I got one of those broker emails, and it was the way they word it sure makes you sweat because they don't really explain necessarily what it means and what you can do with your position. They just say, hey, by the way, you might be margined or whatever else because you've got this in your account, and you think, oh my goodness, what the heck am I going to do? But the important thing is to remember the trade. Okay, remember, we're talking about getting assigned early. So what you have to do here is you have to remember what the trade actually is. Buy to open the 77, sell to open the 79. So these options were assigned to us, right? Someone who bought the 79 assigned to us. We sold the 79, and so these were assigned to us. But this leg of the trade gives us the right to own shares of Wells Fargo at 77. So again, this leg, they shorted. We're now short. But this leg is what gives us the ability to own the shares at 77. So if you own shares at 77 and you're forced to sell them at 79, good news, you just made $2 per contract, which is the max value of the spread. And one of the cool things here, folks, is that even if you bought the trade at $1 and you were planning on getting out at $1.50, you had a profit target. Well, if you get exercised or you get assigned from the short side, you're now going to make $2 a contract, even if you're only planning on making $1.50. Now, obviously, the $2 is not the profit. That's the max value. So it depends on what you paid. So you just do the math. If you paid $1, you made a net $1. If you paid $1.50, you made a net 50 cents, so on and so forth. But again, you were assigned short on this side. You exercised this side. And what that means net is that you own shares at 77 and you're able to sell them at 79. Okay, so hopefully that makes sense. I've got a ton of questions about that lately, but an early assignment on one of these debit spreads is going to be a good thing for you. All right, let's go to question 2, which is another question I get constantly. I know Graham does as well because we put out trades and we'll often have a price on the trade. And someone will ask, okay, well, I can't get in at exactly the penny that you got in. Sometimes I get better, sometimes I get worse. How much do I chase? Well, a little tougher here because there's lots of factors that you have to consider when making a trade. But the biggest thing to understand is that the reward potential of a spread is capped, right? So that means the more you pay, the more you're going to lower that risk to reward because of the capped nature of a spread. Example, let's say I want to trade an XLF $49 $50 call for 46 cents. In this example, right, the max value is going to be $1 because it's a $49 $50 call, which is a max value of $1 if it expires. Now we paid 46 cents, which means we have 54 cents of profit potential left over. That means our potential gain here is 117%, right? You paid 46, you could make 54, then your potential is 117%. 46 versus 54. That's the risk and the reward. So what happens if you chase 2 pennies? You go from 48 to 52. Well, now you go from 117 to 108% ROI. What if you chase 5 pennies and you go and instead of paying 46, you pay 51? Well, now you lowered your reward to 49 cents. That's a 96%. What happens if I chase 10 pennies? The trade was in for 46, but you paid 56. Well, that takes your reward down to 44, which is a 78% potential. So notice how quickly the profit potential went from 117% down to 78%. And that's because the capped nature of the spreads, where a small adjustment in what you pay has a big impact on the total trade because that scale is sliding. So a good rule of thumb, in my personal opinion, is not to pay more than about 5% extra of the recommended debit value, because that 5% rule is going to help you whether it's a $5 spread, a $10 spread, or a 50-cent spread. Okay, so if it's a 46-cent spread, we're only going to be able to chase by about 2 pennies to stay within that spread. But if it's a $4 spread, then you could pay 20 cents extra and still be within a reasonable range. So use a percentage versus using an actual dollar amount, and I think you'll be within reason on those kind of chasing more often. Okay, is there a good rule of thumb for how much volume an option should have to trade it? Well, the quick answer here is no. We're using limit orders, right, guys? So it doesn't really matter to people say, Nate, I can't believe you traded that spread that doesn't have a lot of volume. And I say, well, it really doesn't matter to me because I am going to trade for a limit. And if it gets filled, great. And if not, I'll cancel it and move on. So I'm not going to pay more than I want to pay regardless. So I don't care as much about the volume. I'm controlling what I want to pay for the spread. Now, if you're looking at HWM, this is one that Graham gave. You can see, hey, low open interest, low volume, wide bid ask. Don't rush. Because of that, just use the limit order, even though it's 120 to 280. It's not like you're forced to pay the 280. Just pay whatever you're comfortable. And about 75% of the time, you will normally get filled around what you want. The other 25% of the time, no worries. This is the same rule of thumb with the income machine. No worries. Pass on 25% of those trades and you'll be fine. Okay, question number 4. And by the way, guys, on that, if you want to use a profit target, then volume matters a little bit more, right? Because you want to be able to exit the trade more easily. So if you want to use a profit target, the exit's going to matter with volume a little bit more. But because it's a spread, even if you don't get filled for the exit, you still have in your back pocket that you can get the full profit if it expires. So you kind of have that as a backdoor. Okay, why do we like debit spreads instead of credit spreads? Well, there are 2 reasons that I like them. But before I give you those 2 reasons, I do want to kill the entire myth around debit spreads versus credit spreads. Because if someone's told you that credit spreads are good for income and debit spreads are good for directional trading or anything similar to that, which I'm sure many of you have heard, that's just simply not true. And frankly, it really doesn't make any sense. Debit spreads can be constructed any way you want. A defensive trade below the price, a wrap order at the same price, a directional trade, anything in between. So any kind of quote unquote income trade that you want to use a credit spread for, the exact same trade can be constructed as a debit spread. It's just simply not true that credit spreads are good for income and debit spreads are good for directional. Now, the 2 reasons that I like, number 1, it's easier to explain and teach and do the math because you're paying a price and then you're selling for more. So anytime you can, pay $1, sell it for $1.50, it's a lot easier to understand, a lot easier to make sense of, and do the math on. So that's one reason I like. And then as we just talked about, it removes that risk of early assignment. So I like to take that completely off the table, remove that risk entirely here, and debit spreads do that. Now, one benefit of credit spreads is that if you want to let the trade expire, Credit spreads give you a little bit of an advantage there because you don't have any fees. They just expire worthless. So you get a little bit of an advantage there on credit spreads versus debit spreads, but I like debit spreads. Now, here's the other question we got this morning. What happens if a debit spread expires between strike prices? So if you expire between strike prices, well, the in the money leg will be exercised, but the out of the money leg will be worthless. So let's go back to our example, 49.50 call spread on XLF, and the closing bell price is $49 or anywhere between 49 and 49.99. It means you will be assigned shares of XLF at $49, but you will not have the right to sell those shares at $50 because that one's out of the money, right? So this is the scenario that I would typically want to avoid unless you want to own those shares anyway. And the good news is it's really easy to avoid. Just check your trade around 3:30, and if it's very close, that's on the expiration. So if it's August 15th, check on August 15th. You can exit with the limit order just to make sure you're out of the trade before expiration. So it's very easy to eliminate that. But if you get exercised between strikes, you'll own the shares. Now, again, I saw some people got exercised. They didn't manually close the trade. If you didn't do that, well, you picked a good weekend to get exercised on some trades because you would have done great. Depending on what you paid for the spread, usually around a break even. If you already had a good till cancel limit, you will need to cancel that limit and set a new closing order before the end of, before you can get into a new position. Okay. So if you have a limit order, it hasn't been filled, you look at your trade, it's kind of between strikes. The first thing you want to do is cancel your current order, and then you will be able to get a new order in and just get filled before the end of the day. All right. Graham, why don't you take this one? I think this one is more up your alley here because you were talking about this just recently with your dollar trades and some of the meta trades and Microsoft trades you took. By the way, I did see a question there from someone who said, on my first example with the early assignment, then I'll own the shares. No, you won't own the shares because you already, remember, are selling the same amount of shares because of the ones you got assigned on to the ones that you're exercising. So it'll be equivalent and they will cancel out. You'll buy a certain amount of shares for the lower strike and you'll sell a certain amount for the higher strike. So you will not own any shares.
Yeah, also, great job there, Nate. That's very in-depth and thorough going through all of that for us. And I'm excited to see where that model portfolio ends up and trading it together.
Yeah.
Another question that I see a lot, and maybe I don't see it that much, but it's something that I want to bring up to you guys because it's a question that I still ponder why this is even possible in the stock market. If you guys came to last week's class, I trade the wrap orders at the money, targeting 100% ROI. And one would think that debit spreads or paying getting this 1-to-1 risk to reward ratio would be less. It'd be more likely that you can do that on a bad stock that's probably not very good, probably not going to hit. And if you're going to do it on a good stock, you would think it'd be more expensive. You'd have to go further out of the money. And actually, I'll show you here that that is true for the SPY. But the question here is, are debit spreads more expensive on good stocks than bad stocks? So if we think about it here, let me just do this. Let me just ask you guys a question, and then I will answer it two different ways. All right, NVIDIA, debit spread betting NVIDIA is going to go higher. Which one has better odds of hitting? NVIDIA going higher or UNH going higher? If you had two stocks to pick, the NVIDIA and UNH, you had to put all your money, don't do this, but if you had to put all your money on one of the two stocks to go higher, which one would you pick? UNH or NVIDIA? All right, almost everybody says NVIDIA, and I would agree with you. I mean, look at the chart. UNH does not like going higher, clearly. It likes going lower. NVIDIA likes going higher. So you would think, reasonably so, that the options on NVIDIA would be more expensive. It would price in less upside for you versus UNH may be cheaper because it has a less likely chance of going higher. Right? I think that makes general logical sense. However, With the way we trade, with the spreads, that does not happen. And in my opinion, that's probably one of the most shocking anomalies in all of finance or trading or the stock market. Again, everybody here said they would much rather put all their money in Nvidia going higher because it's likely to go higher, but the price is the same. So you'd think that it would be cheaper to buy debit spreads on stocks like UNH, since the market makers would price those odds in, and you would think it would be more expensive to buy debit spreads on good stocks that are almost destined to go higher. Now, to be clear, if you look at the different options chains and like call options versus basic put options, those are going to be more expensive on the better stocks. Better stocks obviously are going to have more expensive call options. That's because they ramp up the options prices on implied volatility and the extrinsic value. However, because with debit spreads, we're buying a call and selling a call simultaneously, same expiration, nearly the same strike, we essentially get to offset all of that price and value. So this is where I think the big secret is we're able to bet 1-to-1 odds, roughly speaking, even on stocks that go up more often than not. So it's like getting paid $2. You risk $1 to get paid $2 on something that happens 70% of the time. Generally speaking, obviously there's winners, there's losers, there's drawdowns, all that sort of jazz. But Nvidia doesn't like to go up or down more often. Up. If we look at the options here, let me tighten this up. Let me just do a perfect wrap here just to see where we're at. So it's bouncing around a little bit, but almost right around 1-to-1 odds that Nvidia goes higher. Now let me just for fun, just because I randomly picked UNH, let's see what UNH looks like. Almost the same exact price. We just saw 266 on Nvidia, 268 here on UNH, practically the same price, except for one stock is terrible. The other stock is amazing. In my
Crazy.
opinion, that is an amazing little hack that most people do not know about.
Every time we do this, I'm still waiting for it to be totally different prices because the broker finally realized, or the exchange finally realized, hey, this doesn't make any sense. But here we are again, still able to do it. It's like you know, going and doing an odds game where you can roll a dice that has six outcomes for the same odds as rolling one that has four outcomes, and then seeing people go to the one that has six outcomes and going and playing that game. It's wild.
Yeah. I mean, I try and find parallels of how to explain it. It'd be like if we had a quarter and every time it landed on tails, you paid me $1. And every time it landed on heads, I paid you $3.
Yeah.
It's kind of like the same, like it doesn't make much sense. But the thing is, Nate, and you know this too, like the market makers, if they wanted to close up this anomaly on Nvidia, right, so that these debit spreads no longer give you better odds or the same odds on really great stocks, the only way they can do that is repricing each individual call option, which
Yeah.
would then skew way, way, way more options volume for them in a bad way. So this is like something that they probably just have to let slide. I mean, they have to know it exists, but their money is made in buying and selling or selling just straight up basic calls and puts to people. That's where they make all their money. The spreads are how we're able to get our advantage and flip the tables a little bit. Now, wow, I got a lot of NVIDIA positions here, so feel free to take some of those. So with that said, I do have a couple final notes here, and then we'll circle back to this. Earnings this week, guys. Tomorrow we're going to do the full market outlook. I'm going to do my breakdown of where we're at. How do we look after that crazy drop? Actually, funny enough, on Friday we coughed up all of July's gains. So July we said was going to chug higher. Typically does. Good summer month. And in 2 days, 48 hours, all of the month's hard work it was gone. But we're bouncing back nicely today. We got a big week coming up with earnings, AMD, SMCI, ANET. Just a little fun fact for you guys. I don't know what's going to happen. I just put my retirement account, the one I cannot contribute to anymore. So I'm just going to see how fast I can grow that aggressively. I just split it between these two for tomorrow's earnings. And then on Thursday, Block. We're going to trade Block. Remind me on Thursday. And then Nate, not to spoil too much, are we bringing in something new this week on Wednesday? Is that official or is that not necessarily official yet?
I think it is 92% official. We gotta cover a couple bases with the team, but Wednesday should be yeah, a new generation of
There you go. So what we're hinting at here is Wednesday, starting on Wednesday, we are going to begin doing what we call the closing playbook as well on top. So Nate and I, we decided we don't work hard enough. We don't do enough for you guys. So we're going to do some more. I'm just kidding. But we are going to, on Wednesday, start doing the closing playbook, which means we'll be able to do some of these last minute trades together. So like Fortinet Wednesday, that could be a fun one. Thursday, obviously XYZ, which is formerly known as Square. And we can look at all the other fun stuff. So keep that in mind for the upcoming schedule this week. I think 3:30 p.m., Nate, is that the decided time?
That's the plan. Yeah, 3:30 p.m.
Short
So
and sweet.
we'll it'll be a shorter session, but
Yep.
still get some more live trading and some content, more Q&A. I'm sure in those two, as we're just looking at the markets together, more charts and trading than training. But still, I think it'll be an awesome session. So guys, mark your calendars. 3:30 every day. We'll have some guests and things like that, but I think it'll be really good for people.
Yeah, and I'll save these. Actually, I got a couple other charts here. I'll save them for tomorrow. So tomorrow at 10 a.m., I've got a couple other things I want you to see. There's your quick, fast preview of it. But I don't want to give too much away because we're already at 11 a.m. But I do want to point back to this. Again, I asked you guys if you had to bet the farm on NVIDIA going higher or UNH going higher, same payout, same risk, you all said NVIDIA. And I showed you that, shockingly enough, in the options market, with the way we're doing these debit spreads, we're able to get 1-to-1 odds. Now, in my scenario, the way I trade them, I personally trade it in a way where NVIDIA, for example, would have to gain about 0.5% or more this week, and I get to double my money. It's up 2% today. So if it only did a quarter of what it did today, all week long, I get to double my money. Now it could go up 10%, it could go up 5%. I don't care. It's a bullish trade. It can go as high as we want it to go. But the secret is I don't need it to go very high to double my money. If you look at the call options right now, the weekly call options on NVIDIA, we'll just do this one right here at the money. It's $3. So you need NVIDIA to close at 184 this week to double your money. You need it to close up. Let's just do this, make it a little bit easier to see. Basic call options. Here's NVIDIA. Here's the end of the week. It needs to be right here to double your money, which isn't out of the picture. It could definitely happen. But with the way I'm trading, I only need it above right about here to double my money. So again, we're increasing our odds, betting on good stocks to go higher and drift to pay us about right around 100%, sometimes 100%, sometimes 120%. Each and every week on just a small move in a stock. Again, just picking the best stocks and letting them drift higher. So if that is something you guys are interested in, we do have a new trade going out today. Actually, Nate, once we get off here, I'm going to log off and go get that trade out to folks. You'll see it go across to the memberships, and that will be going in one click, Brent. We're going to be trading a great stock that typically likes going higher with 1-to-1 odds, with a shot to earn right around 100% this week, even if stocks barely move, even if it gains under 1%. Even it goes, some cases we've had them do 0.3% and pay out nicely. So Dave, if you don't mind pulling that up, and we'll go ahead and get that rolling for you guys. If you like the thought of playing 1-to-1 risk reward on stocks that go up 70% of the time, then this is for you. And I don't think we're getting any sound.
Give me 1 sec.
Again, you guys know the drill. Profits, performance, not typical. We're not going to guarantee any future earnings because, of course, you could lose money on any trade that we talk about. But every single trade here is based on real trades sent out in real time. This is not back tested, not paper money. The average return here, winners and losers, 32% per trade in 4%. Guys, that's winners and losers. That's that average return we were talking about. 66% win, and there's my favorite number, an average win of 93%, even though most of these stocks barely move. So obviously can't guarantee specific future results. There's always a high degree of risk. If you want to go through, just go to Prosperity Pub and you can read all of that. So welcome. If you guys don't know me, I'm sure you do. I'm Nate Tucci. I'm the publisher here at Prosperity Pub. And when most folks are paying, $500,000 or even more to trade popular stocks like Apple, Nvidia, or Google, one Florida-based trader discovered a new way to tap into what could be some of the most cheap options in the market that you can take advantage of. Trades costing right around $1, right around a good George Washington there to get in. And with this unique trading method, he's been able to watch as these trades double in just a very short move each and every week. In fact, over the last 18 months, he's already done it 58 times, including multiple doubles on some of the stocks I just mentioned, like this dollar trade on Apple, which cost $1.24 to get in and paid 101% ROI by the end of the week, or his $1 on Nvidia, entering at $120 per contract, pretty cheap way to trade Nvidia, and banking 108% by the end of the week. And then we had this dollar option on Google, which traded at 46 cents per contract and paid out 117% by the end of the week. You see, these money doubling opportunities on the dollar options are all thanks to a little known trick to rig the options market. And yes, I actually mean rig. It's a trick that very few people know exists. I'd guess that less than 0.01% of traders have ever in a trade. As a matter of fact, I've personally worked with dozens of trading experts. I mean, a lot more than that in the last 10 plus years in the financial markets. But I had never heard of it until my special guest shared it just recently. Honestly, when he first told me about this, I didn't believe him. I didn't even think it would be possible to trade the market this way, because he claimed that unlike most options trading methods out there, where you need a stock to move 5%, 10%, sometimes even more to double your money, by rigging the market with these dollar options, we're able to target right around 100% ROI each week, even when the stock barely moves. That is my favorite part of everything you're going to learn today. For example, take a look at what happened with one of his trades on Apple. So during the week of June 24th, Apple is chopping around, going nowhere fast. We've seen Apple do a lot lately, and the stock gained 1.1%. Now, most investors would make next to nothing there, and option traders were probably hoping to break even on a 1% move. But with the dollar options, each one costs about $1.21 per contract to enter. Folks could have made 106% by the end of the week. Now, guys, does that chart look like a 106% gain chart to you? No, most people are not making 100%. The price of Apple barely budged from June 24th to June 28th, which would have been enough to turn $500 into $1,033 on that chart, or $1,000 into $2,066 for the week. Then the next week, he did it again. If you set your trade with him on July 1st, when he sent out the alert, folks would have gotten in for about $1.25 a contract. And again, watch as the investment more than doubled in a single week, enough to have taken $1,000 and turned it into $2,250 in just a couple of days, or $2,500 into $5,630. And keep in mind, these trades I'm showing are not from a back test. They're not a theoretical opportunity that you look back in the charts and could have found. Each and every example I'm sharing are from his live trade tracker, which he's been sharing in real time. Like the very next one, again, going for a double on Apple. This time, this was during the week of July 8th, going back to last year. Apple only moved about 1% that week. Again, most investors were probably falling asleep at the wheel, and option traders were starting to panic as that time decay is eating you alive. You're not making any money. But with this unique way to rig the market, by using the dollar options, anyone could have followed along, paid $1.11 per contract to take the trade, and automatically cash out with a clean 100% ROI for the week. Once again, guys, does that look like a chart that you should have been able to make 100% on Apple? I don't think so. Common shareholders were left with pennies that week for every share. Now that 3 weeks in a row from real-time published trades where you could have doubled your money each and every week, and you didn't need the stock to make a big size move to see it happen. Depending on how much you want to start with, let's say $500, $1,000, $2,500, that would have been a shot, and this is just in those 3 weeks, to grab $1,659, $3,318, or $8,296. That's not even compounding. That's just $500 in each one, $1,000 in each one in under a single month. Now, while that might sound too good to be true for some of you listening right now, let me reassure you that is as real as it gets. He's been sharing these dollar options with a whole group of students just like you. And here's what they've been saying. Ken, 100% gain on Apple in 5 days. Greg said 1,040, 100% gain on NVIDIA tomorrow, starting with about $1,000 on that one. Ben, who saw winners with his first couple of dollar options, said my first 2 trades were both 100% in a week. And then Ed R., who had 4 trades, said this is the only trading methodology I use now. My winning trades for the week: AVGO 121%, SMCI 121%, Meta 90%, NVIDIA 109%. Or Richard said, hey, Graham, being conservative, I made $2,820 in the last 2 weeks with those dollar options. Loving it. Or Jim T said, I love so far. I've made over $5,000 using the strategy. Guys, these are from people who are not used to making 100% gains. They thought 100% gains were few and far between, and now they're hitting them on a regular basis because of this style of trading. And so today, my guest, I'm sure you probably know who my guest might be, is trying to bring on 50 new students to take the next dollar trade opportunity with them. So if it sounds like something you'd be interested in and you'd like to get in on the next dollar option, hang tight, because over the next few minutes, he's going to walk you through exactly how they work, why almost no one has been able to crack the code on these dollar options before, and the key insight that he's discovered that now allows him to rig the options market like he's the house at the casino, plus how to get in on the newest dollar option today. Yes, today. So welcome to Dollar Options. Thank you for being here. Like I mentioned, my name is Nate Tucci. Over the last few years, I made quite a name for myself by producing some of the top winning strategies available, like 77.7% on my overnight option. I'm sure most of you guys know about that one. 80.5% on two-way options, actually a little bit higher now, but who's counting? And then 100% win rate so far on the weekend income strategy. But if you follow my work, you know what I'm focused on. What I care about isn't the next moonshot AI stock. It's maximizing the bang for your buck in a systematic way. And that's exactly what the dollar option delivers, what it's all about. Not only are they very cheap to get in on, but they show the power to pay a 93.6% ROI on average. Again, and you guys know each week they work out. Like I said, most folks are not used to hitting 100% on a regular basis. But if you want to get used to that, then I would focus on this presentation very closely, because those are based on real-time results. Now, with results that good, it doesn't take a genius to realize how quickly that can scale an account over time. In fact, with his dollar options shared with folks like you and me in real time, guys, this is including winners and losers from his real track record. Someone starting with $2,500 and never compounded a penny, just took every trade without compounding, they would have already seen $70,394 over the last 18 months. Let's give a little bit of a round of applause for $2,500 to 70 grand in the last 18 months of real trading. That is not something you see every day. That's net profits and losses combined together with a real live track record. For some people, that's a full-time salary. For others, that's a couple years of pension payments. But the beautiful thing with these dollar options is that you didn't have to work 5 days a week to make that happen. Just one quick trade at the beginning of the week, and you're all set. Your job is done. And the man behind it all, of course, is Graham Lindman. And Graham is no snub when it comes to trading the stock market. Not only has he been actively trading since he was in diapers 15 years ago, but he has a unique knack for using mathematical driven odds to find unique ways to beat the market, much of what you guys have seen in the recent lessons we've been sharing. And by leveraging those odds, not only has he been able to more than double his Robinhood account in the last 6 months, posting north of $30,000 in profit, but then he did it again, more than doubling his 25 active trading account in Thinkorswim over a different time span. And according to him, the most powerful discovery he's ever come across is these dollar options. And that's why I want to make sure he was on today to walk you through how the dollar options work step by step. And then open the door, of course, the fun stuff, for you to actually trade the next dollar option with him if you'd like to. So Graham, take it away from here, my friend. We've been leading up to this for a while. I'm excited. I think a lot of people are excited. And honestly, the real money 18-month track record you put together is phenomenal. It's not me blowing smoke. That's through a lot of crazy market conditions, and you have absolutely crushed it. And so I really think it's really impressive what you've done.
Well, thank you, Nate. Thanks for that very kind introduction. And I have to agree, again, like you said, the reason we got into this whole profit factor spiel is because we saw the profits from this program said, oh my goodness, this is the best thing we've ever seen, or for me, best thing I've ever seen. There's a lot more to it. Now, I promise, guys, if you pay attention and take notes, you won't be disappointed today. And that's because I've uncovered what I truly believe is one of the most incredible stock market hacks that exists today. And I really mean a hack. It's one where you can start using it every single week to target doubles in your own account on some of the most popular stocks out there. All starting with as little as $1 per contract. And that's important. Because if you could turn $1 into $2 in the stock market, well, then you have a legitimate chance to turn 500 into maybe 1,000, or turn 1,000 into 2,000, or even 2,500 into $5,000. You get the picture. And that's the cool part about these dollar options. While you don't need a big account to get started, anyone and everyone has a shot to start scaling their account over time, targeting the next double each and every week. For example, let's look at the dollar option I took on Meta in the first week of February this year. Now, back in February, the market conditions were definitely less than ideal, to say the least. S&P 500 had been stuck in a downwards chopping trend for weeks on end. And we had all sorts of negative news plaguing the markets. Between that DeepSeek AI scare, if you guys remember that, and then the new tariffs coming into play, there were a lot of reasons for US investors to be worried sick going into the new month of February. But to be honest with you, I really didn't care about the news. And that's because with the odds we have by rigging the options market over and over again with these dollar options, I knew that we had a shot to target double our money even while most stocks fell out of bed. So on February 3rd, I placed a quick trade on Meta, only $1.20 per contract to enter. And by Friday, I was automatically cashed out with a cool 108% return for the week. So that's enough to have turned $500 into $1,041 by Friday, or 1,000 into 2,083, always a double. Then the next week, it was no different. February 10th, I took the dollar option on ISRG. Now this time, the stock parked out for the week, gaining less than 1% on the underlying price. You can see the chop there. But by that Friday, it was more than enough to hand me a double yet again. Now that's enough to have turned $1,000, doubled it into 2,000, or 2,000 into $4,000. Now, before we get too far along, I do want to be clear with you guys. Not every trade is going to work out. There's going to be big winners, small winners, and losers along the way. That's just how trading works. In fact, I'll even show you some of my losers today. And that's something that most so-called experts online would never do. They all avoid the losers. But that's because I want you to truly see just how powerful these dollar options are, even with the good, bad, and the ugly. Because by simply rigging the options market to play the mathematical odds over and over again, we can see the results really start to stack up over time with the dollar options, even with those losers. For example, let's rewind back to the month of November. Now, let's say someone had $2,500 to start out. Now, keep in mind, in November, people were more uncertain than ever before. I think we talked about this here. As a matter of fact, there was a record amount of fear as the number of put option buyers exploded. CPC went spiking way high. Now, of course, none of that really mattered when it came to these dollar options, because you could have tuned out all of that noise and simply placed a quick trade week after week all month long. Now, for the month of November, folks following along went 3 for 4 on the trades, 3 winners, 1 loser. But if you did that, you had a chance to pocket an extra $3,650 in profit that month, including the loser, $3,600 for November. Well, now let's look at what happened in December, the next month. 2 for 3 that month. We took the last week off for Christmas and still managed to walk away with an extra $5,159 in profit for the month. So imagine that. Imagine taking the grandkids out Christmas shopping with an extra $5,000 padding the wallet. That would be nice. But we're not done yet, because January was the same exact thing. This time we were 3 for 4 that month on the dollar options. And when you net it all out, we had a shot to pocket a grand total of $4,490 in profit for January. Now, my point is that we don't need to win every single trade to make a good deal of money, because with the way we're gaming the options market here, we're not approaching these trades like your typical investor or guru. We're not staring at outdated technical indicators or reading boring financial statements. Instead, we're using a mathematical approach to help put the odds in our favor, kind of like what a casino does.
Well, if there's one person that I would trust to do that, it's definitely you. Let's not forget, you first started your trading career when you were a sophomore in high school. Okay, so not diaper, sophomore in high school. I misspoke earlier. Under the mentorship of a former banking VP. And that was the same year you happened to test out of college for math class, 6 years in advance. I mean, I'm a math guy, but Graham is really a math guy. Not just that, you're probably the only person I know who's nailed a perfect score in your math portion of the SAT, landing you a full ride to college, which is why you were quickly grabbed by 2 former Mega Million hedge fund managers to train under their wing and develop strategies for them. So when you first called me up and told me about the dollar options, although I was skeptical at first, I mean, some of those charts do not look like 100% gains. I had to listen. And while your real-time results are nothing short of incredible, it's the stories from your students following along that really caught my attention. Like Robinson, who said currently a member, up $5,000. Jennifer said, I've been trading for the past 7 weeks. I'm averaging $8,000 a week with the winners and losers combined. There's that winners and losers combined again. These have revolutionized my trading. Or like Charles said, up $19,000 this month. Keep it coming. So Graham, do you mind walking folks through the dollar options and how you're using them to actually rig the market week after week? Because like I said, most people are not even familiar with hitting consistent 100% gains.
Well, Nate, I would absolutely love to. Now, you guys have to understand that when I say options, most people assume I'm talking about just buying options and hope that a stock goes higher and higher and higher. And that's how most people trade options. But there's actually a big problem with trading options that way. And if you've been around my work, you know this. You see, when Wall Street lists these options and then sells them to us, they bake in another factor that makes it nearly impossible to consistently win with options. That's called time decay, or the time premiums. Now, the way time decay works is the longer you hold one of those options, the more the premium on your position is losing. It's decaying against you. So you can be totally right about the direction of a stock, but still lose money on the options because time decay is working against you. Now, if you're not familiar with options, don't worry. You don't really need to understand all of this to take advantage of these dollar options. But I do want to walk you through it because I want you to have that light bulb moment just like I did. It changed everything for me. You see, when Wall Street lists these options and sells them to you and me, they want those options to expire worthless. As a matter of fact, they're really good at it. One study by the CME reported that 76% of options expire worthless. And in another report, a contributing writer at the Financial Post studied options extensively, and you've probably heard this stat. Up to 90% of all options buyers actually lose money on their trades at expiration, even if they're right about the underlying move. And I've been there a million times before, and that's why I was so happy when I found these dollar options. Because Wall Street intentionally designed it this way, because when you lose, they win. So they set you up for failure by jacking up options prices with aggressive time decay baked in. That way your wins are few and far between, letting Wall Street keep most of that profit. Now, my point here is that most investors, they're not losing money on options because they're getting the direction wrong or bad at picking stocks, but they're most likely losing because the options are typically rigged against you. However, as I'll show you, thanks to a little known phenomenon hidden inside the options market, we're able to eliminate almost all of that time decay on our trades with these dollar options and gain what I truly believe is an unfair advantage on some of the best stocks out there. And that allows us to target right around 100% ROI each week, even when the stock barely moves. For example, let's take a look back at May 27th with one of my other trades on Meta. And yes, I do love trading the dollar options on Meta. Might even do it this week. Now, following the big April market correction, Meta was rebounding nicely, up about 20% on the stock. Now, most people, when they hear 20% in a month, they probably would have waited for a pullback or a better entry point, but not me. Because on May 27th, I jumped in with the dollar options on Meta, only $1.18 per contract. Now, over the course of the week, Meta didn't really make much of a move. In fact, it didn't even gain a full percent, just 0.8% on the share price. Now, let's say you $2,000 invested on this one. Well, with time decay working against you on the overpriced options, if you just bought calls like most people do, you would have lost 100% return on investment. You would have lost $2,000 as Meta didn't even make it close enough of a big move to break even, let alone doubling your investment. But with the dollar options, it was a completely different story. Even though Meta barely ticked higher that week, folks following along cashed in big, more than a double, a chance to pocket $2,237 in profit, more than doubling the investment in a week. And it was the same story with my other trade on Meta back in May. Actually, I had two here. The week of May 12th, Meta only gained, get this, 0.14%.
That's ridiculous.
Not 1.4%. That's 0.14%. Again, most options traders lost money. Time decay ate their investment away. They lost the full $2,000. But with the dollar options, which I got filled for $1.20 that week. You could have again doubled your money, $2,167 in your pocket by the end of the week. That's a 108% payout, while Meta only moved 0.14%.
Yeah, only about 800 times the underlying move on that one. It's insane. Those charts are crazy. I mean, that's why I got so excited when we first started even talking about the original idea that's even behind the system here. It's one thing to make 100% if a stock shoots higher, you time it exactly right. But to do it when it's literally hardly moving is insane. And between those two trades, which you share with folks in real time, again, these are all real track record trades. We're talking about the difference. Regular options, same time, same investment, everything the same, but a regular option loses $4,000, and instead you profited $4,404 on the very same timing, very same stock. That is a really big deal. It's like that. I always say the ability to turn losers into winners is the biggest advantage any regular trader can get. And so walking away with over $4,000 on two trades, especially when you consider how much people need an extra $4,000 right now, the same stuff that we've been hitting for months, with inflation being as brutal as we've seen, sticky inflation, they call it, not going away, record numbers of retirees going back to work, record number of people picking up second jobs, record lows in savings, all of that stuff piling up at the same time. So I don't know about you, but I would personally much rather click a few buttons than sit at a desk for an extra 20 hours a week, especially when these dollar options give us the incredible upside. We're not talking about chipping away at 5% a week. We're talking about incredible upside, shooting for a double every single time. In this case, 2,167, as that ugly chart did a whole lot of nothing, and still paying even when it goes slow, even when it just kind of grinds sideways, and the same people trading regular options are losing money. So let's talk about, I think, what everyone's probably asking. Okay, how does a chart that moves 0.14% make us a double? How is that possible? And secondarily, you mentioned these dollar options were practically able to eliminate all the time decay that eats up most people's accounts. So is it a credit spread? Is that what we're doing? Maybe we're doing naked puts and actually using that premium on as our advantage, and we just need about $1 million in our account and we'll be fine.
Well, no, we're not selling credit spreads or naked puts here or anything like that. Everything's risk defined. But funny enough, I actually discovered this new way to rig the options market by working on an income strategy for a former big time hedge fund manager. You see, most savvy investors who know that buying options is a losing proposition, like I just showed you, well, when it comes to trading, these people who know that tend to swing hard in the opposite direction. So instead of buying options near the price of the stock, they go the other way. They look to sell the options that are way out of the money, knowing that they can collect a nice premium time and time again, usually around 5 to 7% return on risk. Now, in my opinion, there's nothing wrong with that approach, and I've seen some traders make really good money with it over time. But in order to see substantial returns, you'd have to risk a whole lot of money to earn that 5 to 10%. So that's like risking $1,000 to make $50, or like risking $5,000 to make $250. And one loser can quickly wipe out months worth of gains, and that really just doesn't sit right with me. But while I was running the numbers on various options models for this well-known hedge fund manager, I quickly realized that the closer you get to the price of a stock with an income style of trade, well, the bigger the payout gets. And if you go all the way up to where the stock price is currently trading at, well, that's where things get really juicy. That 100% payout, the chance to double, you can get right around 100% return on your investment, even if the stock barely budges. And that's the dollar options, like I've shown you time and time again. And that was the key insight that changed everything for me, because by simply twisting the typical income approach, which works really good, but twisting it for these bigger gains, setting my options up near the current price of the stock, I'm able to go for 10 to 20 times the typical income payout. And get this, I don't have to rely on a stock to make 5%, 10% move to double my money like most people do. Instead, I can hit that double even if the stock gains less than 1% for the week. Now, in my opinion, these are the perfect income trades to take each and every week. For example, like my trade on ServiceNow back on January 21st. So instead of using the normal income technique on this ticker, targeting 5 to 7% for the week, I twisted it by using the dollar options to target 10 to 20 times the payout. And here's the wild part. Instead of needing a huge move in the share price to hit my double, like most people do, I only needed the stock to gain about 0.2% that week. That's not 1%. That's not 0.5%. That's 0.2% that week to double my money. That's 1/5 of 1%.
Crazy.
And sure enough, over the next few days, you can see here, service now moved well into my line in the sand, shot right through it. And it paid me 120%, 127% that week. And then the next week, I did it again, this one on Lululemon. And again, instead of using that normal income approach to target 5 to 7%, which isn't bad, it's just not very much. Instead, I twisted it by using the dollar options, going for a much, much bigger payout. And again, all I needed here was Lululemon to gain about 0.22% that week. Again, not 1%, not half a percent, 0.22%. If you're curious, that is next to nothing on a stock like this. And by the time Friday rolled around, again, see it here, Lulu moved higher and I pocketed another double, 108% payout on this one. Again, real money trade, real time. And here's the crazy part. How I believe we've been able to rig the entire thing. Even though stocks go up far more frequently than they go down, I mean, zoom out on a picture of the S&P, you tell me, does it go up or down more often? You know, obviously stocks go up about 70% of the time. But the way the options market is set up and the pricing models that Wall Street uses, they must offer these dollar options with that right around 100% risk to reward payout on every single stock out there. That means I can simply take these dollar options on the strongest, most stable, bullish trending stocks in the market, the ones that are already moving higher, and just place them again and again and again and make out like a bandit. Again, this is how I'm able to game the options market, able to hit that double, even if the stock that's already moving higher, even if it barely moves, simply has to drift ever so slightly in the direction it's already headed, and I'm golden. And if it does that, I'm able to double my money by the end of the week. Folks, this isn't just a market inefficiency. It's a glitch in the whole system, and there's nothing they can do about it. With these dollar options, we get to exploit it each and every week.
Yeah, I have to say, I was absolutely blown away. I mean, when you first said, hey, I can make a trade on a stock if it moves 0.25%, I assume you were trading stocks that didn't move at all. And so that's still like a big move. You're trading Meta and Lulu and stocks that move 5% in a day, and they go, it's just crazy. After those last two trades alone, not including the 50 plus other doubles you have in real money trades, if someone had only 2K, that would have been enough to walk away with $4,700 in profit. That's a heck of a 2 weeks. Not enough to make you a millionaire. Obviously, we're not talking about that. There's not, one trade, retire. But $4,700 would have been more than triple the average weekly take-home pay. The average weekly home, what you actually net is $1,216. It's more than triple in 2 weeks. $4,700 could have gone toward paying down the mortgage or car loan or maybe vacation that you've been wanting to take. And again, you're not relying on a Hail Mary. That's what most people rely on to hit a double. You need a teeny tiny move in the stock and you're golden. Graham, I think I can speak for everyone here in the room to say this is definitely something that we all want to be a part of. I mean, I have started taking more and more trades in this same way because it's just there's nothing else in the market that works like this. And your current students, well, obviously they've been blown away because they've seen that track record in real time. Lefty wrote in $750 per week the last 3 weeks. Sandy said $2,500 on NVIDIA, expired with just 10 contracts. Jen said, I really love the dollar options, $1,250 on MLM, $1,800 on Amazon, and a beautiful $5,700 on Wells Fargo there. Or Ed said, 2 months. I love it. I'll be using it again. Looks like I'll be 7 for 8. Never happened before. I'm fully on board. Most people have never hit 7 for 8, 100% winners in their entire lives because it's just so darn to do under regular circumstances. Mark said, made about $10,000 last week on the Apple trade. What do you know? 100% gain, just like most of them. We have pages and pages of more testimonials just like those from your students. So Graham, it's time to tell us, how do we get in on the next dollar option? And by the way, let me front run you and answer one question already, which is people think that by doing this more aggressive, you're risking a whole bunch of extra money. Boy, do we have a surprise for you that it's actually less money to trade these 100% winners than the 5 to 7% ones Graham was talking about. So how do we get in on the next dollar trade?
Well, obviously, the key here is structuring the trade in exactly the right way to take advantage of this market phenomenon. And again, like you said, I would bet that less than 99 or less than 0.01% of people even know about it. So once you know how to structure it from there, you just have to know which stock to use it on at the beginning of the week. And that's why I'm going to show you guys everything you need to know to deploy your first dollar option right away starting this week so that anyone can start using this brand new method to target doubles each and every week starting right away. And it really doesn't matter who you are, where you live, or if you're young or old, anyone is welcome to get started today. See, I put together a step-by-step workshop to show you exactly how you can start targeting these doubles with just a few clicks of the mouse. It'll include the full details from how to place your first trade to specifically how these dollar options work. And I'll also show you a trick, a risk-cutting trick my team and I picked up that increased our overall win rate by a margin of 20%. Now, typically a class like this, we'd be nice and sell for $497 to $1,000. But today I'm going to give you the chance to claim it for free. Now, once you get your hands on this step-by-step workshop, you'll be stunned at how clear-cut it really is. You'll immediately be able to start using it every week if you want to. And then after just hitting a few buttons, you can have a trade lock and loaded. That's all there really is to it. For example, like with my trade on Kava last year in September. I loved the stock last year. Now, on September 9th, my members and I took the dollar option on Kava. You can see where that's at right there. And you could have gotten in two with just a couple clicks of the mouse. Now, as always, we didn't need it to go to the moon. We didn't even need to be the strongest stock in the market that week. We only needed it to drift ever so slightly in the direction it was already heading. Remember, I said stocks go up about 70% of the time. I'm just betting they keep doing that. In this example, only a tiny 0.4% move to hit my payout. And to no one's surprise, Kava surged right past it that week, and I doubled my money yet again, 100% return, enough to take $1, turn it into $2, or take $1,000 and turn it into $2,000. And it was no different with the trade I took on Progressive this year on April 28th. I set the trade in a way that would pay just north of 100% as long as Progressive simply drifted higher in the direction it was already heading. Now, as a matter of fact, with the dollar options used on this trade, I only needed the stock to move about 0.8% to hit my full payout. Again, less than 1%. Sure enough, Progressive soared right past that, well into the clear, handing over a massive 131% ROI for the week, enough to have turned $1,000 into $2,315 by Friday, or $2,000 into $4,629.
Yeah, I love it. I mean, especially those even juicier ones, 130%. Imagine checking your account on Friday, seeing a few thousand extra bucks sitting in there, hands-free. You're not doing anything. You're not waiting for an exit signal. And some of you don't even have to imagine because many of you took that trade. Like Clay said, PGR made me $1,000, paid for the service, and looking for more. Deb said it closed 2 PGR trades today. Those were over $5,000 in profit, which would more than pay for your program for a lifetime, which I would highly recommend. Me too, Deb. And of course, any regular brokerage account will do the trick right here.
Yeah, any brokerage should be fine. And if you have an approved 401k or IRA, that can work as well. So if you want to see just how powerful these dollar options are with your own eyes this very week with your own trade, well, this week I'll share with you my top play that you can take right away. I'll share with you today, and it's going to target another 100% ROI by Friday. Now, that way you can follow along if you like. I'll place it with my own money as well, and you can just copy and paste a trade in a matter of minutes. And remember, once a trade is set, your job is done. The options are designed to automatically close out for you by the end of the week. And today, the folks out there can claim access to this workshop and the new trade so that they can start implementing this unique strategy in their own accounts just by subscribing to the exclusive trading service and probably the most impressive trading service I've ever made, the Perfect Income Trade Alerts. Now, the Perfect Income Trade is the only program in the world that I know of that rigs the options market on some of the strongest stocks out there to target doubles each and every week, even when the stock barely ticks higher. And today, I'm looking for 50 new traders to join me as we jump in on the newest trade right away. Now, if that's you and you want in, let me quickly walk you through everything you can expect as a member, and then I'll drop the link to access the newest position today. So once you become a member, well, each week you can expect the newest Perfect Income Trade Alert to hit your email inbox on Mondays, usually right around noon. So inside you'll get the stock ticker, my quick analysis, the options criteria, entry price, max payout value, and the percentage move we need to hit. Remember, normally way less than 1%. Again, everything you need to know to take the trade if you'd like to. And each one is designed to pay right around a double by the end of the week. After that, you can take about 30 seconds to set the trade, and that's all there is to it. Then, of course, on Friday, I'll follow up with you again on how the trade did and if there's any action we need to take. Remember, most of the time it closes out automatically for us, and I'll just give you a little recap there. For example, like the Perfect Income Trade that I sent out recently on Apple. You would have received the entry alert right to your email, cell, and Telegram. You can't miss it. And in that alert, you would have seen that we had a shot to double the investment on Apple that week, even if Apple only gained a 0.5%.
Oh, I love it.
By Friday. So you have a full week for the stock to make 0.5%. If you check your trade with me, like many of my members did that week, well, you could have come back on Friday to see a remarkable 110% payout on the perfect income trade as the position automatically closed out for us.
Yeah, so another one, $1,000 turns into $2,110, $2,500, like some of your members said, $5,252 by the end of the week. And as a member, folks will get 52 of those opportunities each year. So 52 different shots to double your money over the course of a year on a stock as it barely moves.
Yeah, and that's exactly right, Nate. Just like one of the next trades I took, one on Aflac, ticker AFL. Again, no need to frantically check the charts, your email, or anything like that. As always, the trade would have hit your inbox on Monday right around noon, just like it did for members. This one showed the power to pay 111% that week, even if Aflac only budged 0.4%. Sure enough, that's exactly what happened. You can see it flew higher there. $1,000 would have turned into $2,111, or $2,500 into 50 cent or $5,200 there. Now, obviously, to get these big juicy payouts, we have to use options. Now, I know that not everyone here is totally familiar with options just yet, but that's okay, because I'm going to walk you through everything you need to know to get started in the options masterclass in the perfect income portfolio. And let me assure you that this is one of the more basic options trades out there. Nothing real crazy going on. But not just that, I'll also give you a pass to join me every day, Monday through Friday at 10 a.m. Eastern in the daily trade room that Nate and I do. And in there, we'll walk through tons of more examples like these. And you can ask me questions and I'll try and answer them along the way as well. Of course, don't feel like you have to make every single session, but this should be a great place for you to come in and meet with like-minded people as you aim to scale your account with the perfect income trade on these dollar options. Now, some of you might be wondering, what happens if we get another bear market? What happens if stocks start to drop? Are we totally hosed? Well, luckily, with the way I've designed the perfect income trade, we can target the same types of payouts too by simply flipping from calls to puts. So when the time is right, we can target doubles even when stocks start to drop.
Yeah, so obviously this membership is stacked. If it were me selling this, I'd probably say, hey, best track record probably that we've ever seen, $29.97 or $39.97. And at that price, I mean, it would still be a steal of a deal. We saw how many testimonials so far from people up $4,000, $7,000, $9,000. And here's why. If you look at the track record so far, I mean, these are real alerts in the last 8 months that Graham's put together in real time. The numbers are just incredible. Anyone who started with $2,500, and this is not compound, this is not risking more and more. This is starting with 2.5K flat. They'd be sitting at $70,394 in pure profit in the last 18 months with the perfect income trade. Guys, it's not going to get a whole lot better than that. If someone was more confident, they start with twice that much, they'd be into six figures added to the bank just following along with each alert totaling up $140,788. Guys, that's winners and losers combined over the last 18 months, just going into every single alert. Not back tested, all real trades issued in real time, no cherry picking. That's every single opportunity. So even at $29.97 a year, I think folks would easily be getting their money's worth on perfect income trades. And your students agree. Like I said, Gregory, he exceeded the program cost by 3 times already. Doug said, if you're on the fence, 1 or 2 trades will pay for the membership. It'll pay for a lifetime. Don't miss it. Best program I have ever seen.
Well, Nate, I would love nothing more than to hear 50 more stories like Gregory, Doug, and the many others you showcased starting today. And my hope is that folks can get there even faster. In fact, I'm going to set up this membership today in such a way that it will feel like you're getting the whole thing for free, and more on this in about 2 minutes. Now, like you mentioned, the perfect income trade tracker has been really, really strong. In fact, going off that last example, based on all the trades taken, winners and losers both included, we're looking about $1,599 per week in extra income coming through the door. That's winners and losers, $1,599 a week. So here's what I'm going to do. I'm going to have some fun here today and give you some instant savings. If you're one of the first 50 in the door today, I'm going to set the price at that exact amount, the amount of our average weekly return. So instead of paying $3,000 a year for access, it'd only be $1,599 for the year. But then I had a crazy idea. to really reward the first 50 in the door today. If you're one of the first ones to jump in on the perfect income trade, I'm going to offer a limited time special to cut that already discounted price in half. I've never done anything like this before with this program, but I wanted to do something special. So I'm going to give you another half off for the first people to jump in on this day today, taking it from $29.97 to $15.99, all the way down to, get this, $7.99 for your first full year of access. And then for the big icing on the cake, for the first 50 new members in the door today, the people who rush in on this special offer, I'm also going to offer you one more bonus. Like I mentioned, I want this membership to feel like it doesn't cost you a dime. As a matter of fact, I want you to have it completely paid off before you get your second trade alert. So here's what I'm doing, the Perfect Income Trade Scholarship. This week, today, I'll send out the next Perfect Income Trade like I always do. Now, of course, I can't promise future returns or protect against losses, but here's what I'm going to do. I'm not going to start your subscription timer until the model portfolio shows at least another $1,000 profit, at least your first double. That means your subscription won't start ticking until you have a legitimate chance to have the whole subscription cost paid off according to the live tracker first. But I have to warn you guys, this is a limited time special. I've never done anything like this, and the best deal on the sign-up page is only guaranteed for the first 50 action takers today. We had almost 500 here today, so it's about 10% of you. After that, it's up to my team if they want to take that price all the way back to that full $3,000 a year, or let a few more people in, or if we just take it off the internet for good, which we're known for doing when we sell out really quick. So if you're ready to take action and put the perfect income trade to work for you, starting with your very first trade, targeting the next double this very week, then go ahead. Let's post that link in the chat, guys. Click that link in the chat right now, or go to prosperitypub.com/PIT, which stands for Perfect Income Trade. Or if you want to, you can give us a call, 904-706-3537. Guys, there's a new trade going out today. Again, it's going to target around a double by Friday. So if you put in $500, we're targeting to turn that into $1,000 into $2,000, and that's going down today. And again, if you join right now, it's not going to be $29.97 per year, not $1,500 per year, which I think is already a great deal. $7.99 guaranteed for the first 50 in the door today. And then once you join, guys, give me a yes in the chat so I have an idea of where we're at on spots.
That's unbelievable. $7.99. I actually didn't even realize. I guess I didn't get far enough to realize it was going all the way down to $7.99. Now, guys, a scholarship will kick in. So you still have to lock in your spot, obviously, right now. Lock in your spot now. And then as long as you are able to get in and secure your spot, then we're going to track the trades and make sure that the time doesn't even start ticking off until there's already a winner in the books.
And some people are saying the web address says $9.99. You guys are getting ahead of me here. The team, I asked them to put together a deal. So it's 1 year for $7.99, but if you want to go ahead and book 2 years, it's 2 years for $9.99. So about $500 a year if you do that 2-year deal. That's what you're seeing there. So what's the new trade going to look like? Well, obviously the members will know. I'll walk you through it step by step. And while I can never promise any future gains, it will be designed to go for a double, even on a small move on the stock. And if it's anything like some of our recent winners, like you've seen here, it has a legitimate shot to pay off the whole membership and then some by the end of the week. That's why I'm doing that scholarship for you, and you don't want to miss it. So click that link in the chat to get started, or give us a call, 904-706-3537.
Yeah, obviously a deal you want to claim right away. I did not even know it was going to be that crazy when Graham first told me he was doing the deal. So between, the 2 live webinar discounts you've got today, the savings and that scholarship, where we're not even going to start ticking the time until that model portfolio keeps racking up the profits and gets you ahead of that $7.99. Plus, you get the ability to target right around 100% ROI each and every week, even with a stock that barely moves. And to me, that's really the whole secret sauce here. The fact that you found out how you can go for these dollar trades and some of those charts that barely move and still pay out a huge return. I mean, for people, I keep saying this, but it's just crazy. Most people I talk to have never hit 100% gain. They think it's a moonshot kind of trade to ever go for that kind of triple-digit return, and yet you're doing it consistently over and over and over again. So really incredible, the live track record that you put together. So real trader's dream. So I like following a lot of these trades. I don't follow a ton of other people's trades, but these perfect income trades that you can go for a 0.3% in meta and double your money are just too good to pass up a lot of the time. So, by the way, you haven't even mentioned, well, I guess now you have, because someone front ran you in the chat. the $9.99 deal, which is for 2 years of access, you get an even bigger discount, crazy $9.99. So if you're going to join, I mean, why not take the $9.99? Amazing deal from Graham there if you want to do that. Again, we're gonna guarantee it for the first 50. So that's who gets in. That's who's guaranteed. We'll kind of see what happens after that. We'll touch base in Slack or whatever once we hit that. Guys, can you give me a yes in the chat if you've already jumped in, just to make sure we have some idea, because we're not looking at the other. We've got Jolie, Crink, Greg, Charles, Mike, Jason, Dan, Jackie is in. Okay, thank you guys. We'll kind of keep an eye here on where we're at on the 50, just so that we have some idea of when we have to make a decision there. Got some VIP people in already. Yeah, the VIP, we didn't even mention that either. We'll mention that in a second. Linda, Tola. Okay, cool. Well, thank you guys. Keep letting us know if you're in. Brandon's in. Louis is in, and we'll keep an eye on it just to see.
Yeah, this is going to fast.
Yeah.
Oh, sorry. I was gonna speak to the lifetime deal. I had about
there you go.
People ask me in the chat, is there lifetime? Is there lifetime? Absolutely yes, guys. Once you take one of the limited best deal memberships today, that, remember, I did that half off deal to get everybody in. Don't close the next page, because on that next page you get a unique invite to upgrade your membership to lifetime, which means no renewal fees ever again. And you also get that legacy access where you can transfer the program over to a friend or family member at any time for free. So if you want to pass it on, you can. But I must warn you, we won't be running this discounted lifetime price forever. So in the words of, how Ryder says, get yours right now. Upgrade the lifetime after joining today. It's a no-brainer. And again, I know I have people in here who said, I'm already a member. Right now, guys, and this is just sincerely saying this, if you have a membership, you probably have some time that's already ticked away on it. I would go ahead and take that 2-year deal now. It's not going to overwrite your membership. It's just going to add to it. So if you currently have the perfect income trades and you want to add to it and save yourself some money right now, I would go ahead and renew now at that $9.97 2-year, and then probably upgrade to lifetime as well. Save yourself some money right now while we're running this short limited special.
All right, and we've got a couple more. Kim, Keith said it'll be within the hour. P. Graves is in there. Okay, perfect. We'll keep an eye on the ticker there as we're going fast. Now, one of the wild parts, if you ask me, and where I think the perfect income trade becomes one of the best programs, certainly from the track record perspective, is that most people think that you need that extremely high win rate and profit factor to make money in the stock market, what we've been talking about for the last couple of weeks. But if you look at the actual numbers, that's dead wrong. So if you missed the beginning of what we talked about today, this is really what's insane. So this case study, where the 4.9 profit factor and the 1.5 profit factor, we've always assumed the 4.95 profit factor makes way more money. But the average return plays such a huge role in it here that actually the less win rate and the lower profit factor can rack up way more gains, because win rate and profit factor actually mean nothing. What matters is that average return, and then how quickly you can repeat it and stack it up over and over and over again. So the average return there, boxed in the green, is what really makes the magic happen. And then you have trader 3, which really takes it to a whole new level with that 2.0 profit factor, which 2.0 is a great profit factor, but most people would never assume that it could compete with a 5 profit factor. And yet, if you tally up all the money, you've got $3,900 over 100 trades, or $32,000 over 100 trades. Not a hard decision to make. And by the way, as we mentioned, if you're wondering, yes, that's a real track record, not hypothetical like trader 1 and 2. Real money, $140,000 racked up with $5,000 in each trade. So it's not going to get a whole lot better than that, guys. I mean, obviously, like I said, you could run some theoretical back tests and get some pretty amazing numbers. But in terms of real money trading, it's not going to get a whole lot better than turning 5K into 140K without even compounding over the course of 18 months.
And Nate, that's exactly right. And I do want to be clear really quick. Guys, not every trade's going to win. I'm not looking to win 100% of my trades here. But because stocks, think about it, guys, stocks go up about 70% of the time. I just need good stocks to drift ever so slightly in that direction they're already headed. And, you saw it, 0.4% move, 0.14% move, 0.2% move on the stock. I'm doubling my money. You can't do that with the way everybody else is trading. But with the way I'm going to teach you to trade, you can do it. And you can see some of my broker shots here. These are old. I take these every single week. I probably got 4 or 5 open right now, a couple up 100%. I got one on GE open right now, actually. That's up about 2 grand for me this week. And so far, the stories have been more than worth it. Here's Deb saying, I joined your perfect income program as soon as you announced it. Have not had a losing trade since. MB says, I have the Apple one expiring tomorrow. 100% ROI on the perfect income trade. Every single trade targeting right around a double. Mark, 100% gain on AVGO yesterday. What about this one? Q says, I'm in VIP. He's a lifetime member. He loves taking the profits week after week. The alerts are very clear and easy to follow, good for all stages of traders. So if you're curious about that, take Q's word for it, not mine.
Yeah,
Michael
exactly.
says, up $1,000 on the Apple perfect income trade. We have Jim T here, says the lifetime price is a no-brainer. I've made more than that on each of my winning trades in this program. That is absolutely amazing, Jim. But starting today, I want to hear from 50 more folks just like those. I want you to be one of those people. So click that link in the chat to get started with the new perfect income trade today. Go to prosperitypub.com/PIT or call 904-706-3537. And again, guys, I know a lot of people, and I like to charge higher prices. This is worth a lot of money. I would love to, I think $29.97 per year would be totally worth it. You would join and make a lot of money. But I know, life's expensive right now. I want as many people to be able to get started with this as possible, which is why we're doing this limited special, cutting it way, way, way down. $7.99 for your full first year. This is the best deal we've ever run. It's probably the best deal we're ever going to run for this. But
It's the best deal I'm ever going to allow you to run. I'll tell you that.
Yeah,
That's unbelievable. Well, I thought $15.99 was the deal. I didn't even get past to the extra one. So, guys, when you pull up the order form, you'll go right here. These are pre-baked. All discounts already applied. $7.99 is the 1 year, but the 2 years is the biggest no-brainer. It's just $9.99. And then some of you ask, hey, I'm not seeing the lifetime option. We'll just pick whichever one you want here, go through, join, and then the next page, as soon as it refreshes, the next page is going to basically say, hey, you want to save a little more money? Go ahead and jump into lifetime. You'll be able to save a little more money, actually a lot more money on that next page there. By the way, give me a yes in the chat. I think we're over 50 already. So I'll have to call Josiah. We'll have to make a decision here in just a minute. Josiah, if you're on, since we hit it so much in the webinar, and we're not even through the Q&A, let's for now keep it open. Just and then when we end the webinar, we'll touch base again. Jono, can you let Josiah know we'll keep it open? And let Sean know that at least while the webinar is open, because we haven't even got through all of our Q&A yet. Yeah, let's go ahead and open that. And then, because we at least want to be fair to everyone who still has open questions that we haven't answered yet. Matt, if you called and it was cut off, we'll open it back up here real quick, just because we want to obviously do right by all of our people here internally, and then we'll make a decision quickly after that. So, like I said, no brainer. We'll get the next trade here in just a couple of minutes. Let me get a couple of the big questions out. And yes, guys, sorry, we hit it even faster than we thought. We'll hold it open for if you still have open questions here, and then we'll make a decision after that. So this is one of the big ones. And let me just speak to this really quick, because you show those examples where people make 5 or 10%. And for some reason, people think that that's less risk if you're doing income style. In reality, guys, you're going to have to risk about 10 times as much money on a 5 to 10% income trade as these ones. So, Graham, can you explain that real quick, and then mention, of course, the average trade as we've already alluded to?
Yeah, definitely. So the average trade, so when I say $1 per contract, you guys know if you've traded options, that's $100. It's 100 shares times $1. So the average trade's around 100 to 150 bucks. So you can get in dirt cheap if you want. And the thing about the way I'm trading, a lot of people, when they trade income style, they don't really know their risk. So they'll place a trade saying, I'm going for 500 bucks, but you don't really know how much you're putting on the line. A lot of times you're having to put 5 grand on the line to do that. Here we are always going for a double, and your risk is always the price that you're paying to enter. So if I send you a trade and I say it's $1.25 to enter, I type out $1.25. If you buy one contract, your max risk is $125. And the alert, I'll also say, and if the stock moves how we want, 0.4% by the week, you're going to double your money. So your max gain is going to be selling it for $2.50, $1.25 to $2.50, or if it's $1 contract to $2. But your risk, you always know your risk. It's what you're paying to enter. So when I give you the price, when I say this is a net debit of fill in the blank, that is your risk. And then we're always shooting for around a double. Of course, I spell it all out for you in the alert as well.
And like Graham said, I mean, some of those, because he really is looking to rig. So he really is looking to get the best possible risk reward for that particular opportunity. You saw some of those 130%, 140%. Those trades might be 86 cents or $86 where you're making 140 or something like that. So that's all going to be in there for the, okay, obviously we've already answered this, but we have to do our due diligence and make sure, as excited as we are, and as, oh my gosh, we're at like 80s. Okay, we definitely went over 50. We have to, we're gonna have to make a decision. But as excited as we are, will every trade be a winner?
Guys, of course not. No strategy wins all the time. But according to the real money trades, it's a perfect income, have been extremely profitable for folks who stick to the system. In fact, Nate, if you don't mind, jump back to those November, December, and January examples. I want to walk you through that one more time. It was up earlier in the presentation if you can find it. Because the thing is, guys, people think you have to. I showed you the profit factor thing. I showed you the 99% win rate being a big fat loser of a trader, in my opinion. Here, we don't have to win every trade. I'm winning about 2 out of every 3, 3 out of every 4, like here in November. Win, 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 loss.
Yep.
Is that good? Is that bad? Well, let's tally it up. When you tally it up, this was starting with $2,500. So with starting with $2,500, you walked away the month of November with $3,650. That's like an extra paycheck for some people right there. And this is, again, based on the real trades that I sent out to people just like you. December, we only got 3 trades that month because Christmas took out a week. I don't like to trade the shortened weeks for us. And we lost one of those 3 trades, 2 for 3 that month. There's going to be losers. But did we lose money at the end of the day? Well, guys, think about it. Every trade is going for a double. We double our money. So we make 100%, lose 100%, make 100%. You're going to end up making money over time. In this example, because that loser was minimized, we end up with $5,159 for the month. That's not starting with $5,000, not starting with $10,000. That's starting with $2,500.
Yeah, it's pretty awesome. I mean, because I know for me, like I'm a little bit more defensive. Usually, if I win 2 out of 3, I'm down a little bit if I'm trading an income style. Winning 2 out of 3 and having a huge net profit is why this track record has stacked up those gains. Why it beats every other thing in the cager or whatever, however else you want to rank it. January, same thing, 3 out of 4, big fat net profit. So that net profit number is just going to rack up crazy quick. I mean, you guys can tell me in the chat. It looks like some people are trying to get in and the page is not loading. Well, we had 500 people in here and things got a little crazy. So just give us a minute. Maybe try Control F5 on there. But we've been talking about how this thing has stacked up over time, and the numbers are massive because the net is so big. Like Graham was just saying, 2 out of 3. That net number is just going to get really big. Okay, another big question we had: can I trade this in an IRA or 401k?
Yeah, it is retirement account friendly if your account is approved for this. And if you're just using a normal account, any regular brokerage does the trick. Robinhood, Schwab, E-Trade, you name it.
Okay, next perfect income trade. Everyone wants to know.
Yep, that'll be going out today here in just a few minutes. So, guys, once the page works again, I hope it's working, Nate. I don't know if you got the confirmation, but go ahead and join now. That will be coming to you in the next few minutes. Again, it's almost noon now, but I promise I will get on it right after this. I've already got the stock pick and the options pick. I just need to publish it with the current price.
Yeah, and Ralph, that's correct. $2,500 into each trade, racked up $70,000 in profit. Not taking a $2,500 account, doubling it, putting $5,000, and then putting $10,000, and just putting the same $2,500 in. Susan said page is working now; she's getting through. Graham, you just touched on this, but let's answer it one more time. How much are we risking? Are we putting in $100 into an income trade and really risking $10,000?
And someone just asked about 2,500. Do you need 2,500 to start? No, guys, no. The average contract is 100 to 150 bucks. It's $1 to $1.50 per contract, and that's your max risk. The number I give you is your max risk. There's no secret number hiding where you don't know how much you could lose. That's your max risk in this trade. So you can trade it with as many contracts or as few, whatever risk level you're comfortable with, and you can also always scale up and down with ease.
Okay, I'm getting this question because I just saw, I think, who was it who just asked? Maybe Asher or John was asking about this. How do you get out of this trade? This is one of the big questions. I personally think that people have more trouble with exits than entries when it comes to retail traders. And so this makes it pretty easy if you want to cover that.
Yeah. So again, guys, with the automated exit, you don't have to do anything. Normally, you don't have to do anything to exit the trade. It's kind of binary. Either we're winning or we're not. Now I'm I'm winning more than I'm not, and that's how we're stacking it up, but it's pretty easy to trade. However, I'll still follow up with you each and every Friday to let you know how the trade went. And sometimes, very rarely, but sometimes there is action we need to take. If we need to just exit early on Friday, that can happen too. That's why I'm just going to follow up with you on Friday and give you the full detail. But about 9 times out of every 10, hands are off. We're done. We don't have to do anything. I'll just give you the recap.
Perfect. Love it. My style as well. And then we did get a couple questions about this. Is there any sort of guarantee? I mean, I can cover this one because this is our standard. We're going to give you guys 14 days so that you can find out if Graham's full of it or not. Is the track record really as good as he says it is? Are his trades really as simple where you only need those tiny moves? And here's the cool thing. I'm going to just blow the lid off something that I'm not sure if I'm supposed to say, but I'm just going to say it anyway. Once you go through the training with Graham, you go to the masterclass, you do some of the live trades, you can actually use this on lots of other trades you like as well.
Yep.
So a lot of the testimonials we get from Graham are actually bonus trades from his members. Hey, I really liked, this other trade that has nothing to do, like a GEV or something we covered in opening playbook. They go put on an income trade like this. They make 100%. So once you learn it, you'll really be able to use it. So what I'm saying is, you get 14 days, and in those 14 days, you can completely learn the strategy. Now, I'm sure Graham would echo the idea here isn't to go, join with an idea, I'm going to get a refund if I don't win, every trade, because win rate's going to be what, 70% if you're really on a heater, stack up crazy profits at 70%. So if you're expecting to win 90%, don't join in the first place. But if you're going to be thrilled with a 65% win rate that stacks up a better cager or whatever other number you want to put up than pretty much anything else, then I think you'll absolutely love the perfect income trade.
Yeah, and the reason I'm very, very happy with that win rate is because we're always going for that double. Now, to your point, Nate, flip back to slide 369. I want to show you guys Jen's story one more time because I think it's really, really powerful. If you can jump back to that slide. Jen wrote in to me, this was a few months back. She said, I really love the dollar options, the perfect income trade. I had to put the apostrophe there to not spoil it too early. Now, here's what's cool. I have never traded MLM in my life. I have personally never sent a trade alert on it, never put any money on it. Jen took what she learned from the training. She's been taking the trades too, went and found MLM on her own. She made $1,250, enough to pay off the 2-year membership on her own based on what she learned. I want you to be able to do the same thing. Now, that week, we had that trade on Amazon, $1,800 for the perfect income trade, cha-ching. But then Jen went and did it again on Wells Fargo. She went and found that one on her own. She made $5,700 on her own in profit that week by taking what she learned, applying these dollar options to her other strategies and trades. And that's what I was saying. This is a legitimate way, in my opinion. I think this is a stock market hack. I don't think this is just a inefficiency in markets. I legitimately think it's a glitch. And once you learn it, I think you're going to be shocked. You're going to love it, and you're going to want to use it more and more, just like Jen did here.
Yeah, it's awesome. I mean, those are obviously my favorite testimonials when someone takes something I've taught them and they go make money with it somewhere else. And that's a ton of the testimonials we get from you. Of course, you've touched on this as well, but I think it's important to know, do you trade these with your own money? Are you just setting out an alert on a theoretical idea, or are these high conviction trades that you're putting your own money into?
I put my own money into them. I give you guys the real fills that I really got, not the sim account, real money accounts, real money fills. I want to make sure you guys are able to get in and out just like I can as well. And I like making the money too.
All right. And then this one we, again, kind of covered, but just to make sure everyone's on the same page, are you glued to your computer, waiting for a signal, waiting for a text from you to actually be able to do this?
Nope. And again, both the entries and exits are very easy to manage. Entries happen on noon at the start of each week. So every week on Monday, if Monday's a holiday, it will be Tuesday. But you just have 2 days you have to care about. You don't have to worry about what happens during the middle of the week. If this is the only strategy you want to trade, you can take the middle of the week off. We're just placing one entry around noon on the first day of the week, Mondays at the start of the week, and we're just checking back Friday around noon to see how we did. Again, normally it's very binary. Normally it's like, yep, we did it, or no, it didn't work out this week. Very rarely will I have to say, let's just exit early, which does happen from time to time, but about 9 out of every 10 times, automatic exit on Friday.
Yeah, and hopefully everyone's already figured this one out by now. But is it going to cost $29.97 if they join right now?
No, I don't think so. Although the page was down for a little bit, it should be back up now. So if you join right now in this room, lock in that $7.99 for an entire year. That's up to 52 trades, one per week, or you can go ahead and get that 2-year deal for an extra $200. I don't see why you wouldn't do that. But again, both those options are available if you join right here, right now in this room.
All right. And by the way, if you guys have already joined, go ahead. Let's tally that up one more time. Give me a yes. We've already got about 50 that I think said yes. In here, just want to at least kind of have a manual tally here of folks in the room. Anita, John, Sherry, Kendra, Charles, David, Stephen, Denise, Mary, Glenn, Dorlee, Shri, let's see. Oh, wow, I'm losing track. Mark, Milton, Joe, Jim. Okay, perfect. Thank you guys. Okay, so you guys are all in. Another Dan, lots of Dans. You guys have secured. We will make a decision on the 799 here very shortly. Nancy, thanks for being in. But for now, you guys are locked in. So the way the scholarship's going to work for you guys is you locked in your access. You have it now. If you got 1 year, 2 year VIP, whatever you got, and we'll be tracking the performance of the trades. And then we won't actually start taking any time away until we have until Graham has a net profit in the actual model portfolio, which is really just one trade for the perfect income trade because everyone's right around 100%. Debbie, if you're trying to call and you can't get through, you might just have to hang tight for a minute because there's so many people calling in right now. We had a pretty big webinar today, and a lot of people stuck around because Graham's been kind of laying the groundwork for this for a while now with the profit factor discovery. Yeah. And then we basically revamped, the way we were looking at all of our strategies and went through. And this particular strategy, the track record, when you do it in real dollar amounts, is kind of second to none. And so that's where everything's been moving lately as we've been talking about these opportunities.
And I do have two things to say. One, Debbie or anyone else here, if you're having trouble getting locked in, again, we weren't planning on this many people being here today and this many people joining. We are extending that opening for you guys, but post your number, your name, your phone number, and your email in here. We can save it, send it to the team. No one else is going to see it. We'll send it to the team so your spot can be locked in. So if you're having trouble getting name, phone number, email, and then we can lock you in. Thank you guys. And number two here, I know we have a lot of people joining right now, a lot of people excited. I have not yet posted today's trade. So if you go to the membership portal right now, you will probably see the most recent trade alert. It was on Robinhood. That one is already up 80%. Don't jump in on that one right now. That one's already up 80%. The current members before today, we took it last week. We had a short week. So I went 2 weeks out on Robinhood. We're up 80% on it, give or take. Just let that one pass. Unfortunately missed it, but that's okay. I'm going to have a new one for you here in just a few minutes. So don't rush in on the Robinhood one. That ship sailed, but that's okay because you're going to get one each week at least for the next year. And I have some questions. Why one a week? Why not two? Well, if you guys went to the opening playbook class a few days ago, you know that the frequency, when it matches the average hold time, that's the optimal number. So we're holding for a week. I only need to do one a week to hit my massive account growth. If I do a 2 week, that's fine, but I can't compound any faster because it just takes more capital at risk. So I'm giving you one a week at a minimum. Sometimes, though, I will say, this week I'm trading Apple. I also really like Meta. So if you want to take what you learn and apply it to the other stocks I like, you can do that. Additionally, keep coming to the opening playbook every day, 10 a.m. We talk through our favorite stocks. You're going to learn this type of trade. You're going to start wanting to take it on some of those stocks we are trading together.
Yeah, and a couple questions about can you do this with regular options? Like, can I put this with regular call? Guys, literally the only way to rig it is not to do it. Like that's the whole challenge. So I understand everyone. Oh, I want all I have is level one. I understand that, but the reality is, at least if you take my view, the broker only wants you to have level one for that reason, because they can kind of take advantage of that. Exactly what Graham was showing earlier with the way they price the options hammers you on that implied volatility and the time. And so you can't trade it with level one because it's literally impossible. The only way to actually kind of game the system is to set up your trades not using regular calls and puts where most people get crushed.
And actually, Nate, it's funny you mentioned that. I had about 20 people email me over the weekend. One of those was Lester, who emailed in. He had not been able to get level two in his account. Guess what he did? He went to ChatGPT and said, how can I get level two options in my account? And it gave him a step-by-step process so that he went to his brokerage, applied for level two, and he said he was approved in about 60 seconds.
Oh, that's fantastic. Yeah. So obviously, lots of benefits of doing that if just in terms of following opening playbook and being able to do a lot of the trades that we do. But probably the biggest benefit is the perfect income alerts because it has that incredible track record that you can really only follow if you're willing to get out of just regular calls and puts where you're going to need huge. Because again, if you want to make 100% gain on a regular call option, you have to get a perfect timing with a big move. Just really no other way to do it with a regular call. That's what most people are doing. That's why we really believe this is kind of hacking the system. And Graham mentioned, we didn't even get into this, Graham. I mean, you touched on it very briefly. I think it'd be worth mentioning again the actual pricing. Most people think that it's like horse betting, if you will. If you want to bet on the best horse, you're going to kind of get screwed on the odds. But with stocks, it doesn't really work like that.
I actually had a whole section in this deck about that originally. I took it out because it was getting a little lengthy. Didn't want to take all your guys' time today. But yeah, it's like this. Imagine you're able to bet on the fastest horse every single week. And you know, at the track, you pay $100 to make $5. Versus you could bet on a slow horse to make $100, but the fast horse, that's never going to be available. But in the options market, it's not that way. With these dollar options we're using, we're able to bet $100 on the secretariats of the world and return $100 on that risk. It's a no-brainer. Again, the secretariat didn't win every single race, didn't win week after week after week, but he won a whole lot. And by stacking those up over time, knowing that the markets typically go higher, good stocks typically go higher, and we can place that one-to-one risk to reward bet just on the obvious sort of situation happening and stack it up over time. That's how we're able to game the options market. We're able to rig the stock market, if you will, in our advantage, kind of like a casino does.
Yeah. So if you guys, I mean, that's why you guys saw so many trades on Meta and Apple and Google and all the top performing stock, Nvidia out there, because we can do that in a way where regular call options, you'd pay all that extra premium, but with the perfect income trade setup, you can trade the best, the world leaders, the top stocks, and still get those 100% potential with very small moves. I mean, when Graham first showed me, I think it was Apple, the very first trade. I think Graham showed me going back a while ago on Apple, to make 100% if Apple moved like 0.2%. Really blew my mind. I had never seen anyone do that because we always thought of income as, you risk 10 grand to make $1,000.
Right.
But as you kind of twist and get closer to the price, as Graham was saying, it really gets crazy what you can do, because I don't know about you guys, but Apple moving up 0.1% just feels like too easy of a thing to happen to make 100% gain on a trade. And yet, if you do it consistently, we've seen how those numbers stack up. So pretty cool stuff. I'm excited. Thank you guys so much. I mean, I don't know how many people at this point put in a yes in the chat. Tons of people blew out that 50 number. So we'll have to make a couple decisions about that in terms of what we do next year. But
Nate, Deanna, has anyone, I just looked at the chat and saw that there's a whole bunch of people who posted their name and number who had a hard time getting in. Maybe we hit that cutoff, but as we promised, we will get your spot saved. Have you already sent that over to the team to start reaching out to Pete, Alan, Judy, Peter? Tons of people.
Yeah, I'm just finalizing them right now to make sure I have everyone.
Okay, perfect. I just want to make sure that I didn't need to send it on my end, that is already taken care of. And guys, we will reach out to you. We will make sure you get taken care of on this special deal. And now I know, Nate, probably we should double the price back again because spots filled up way too fast.
Yeah, that was fast. But thank you everyone who jumped on and grabbed your spot.
Oh, hey, Lester.
Awesome to see that. Yeah, Lester was the one who used ChatGPT, right?
Yes, he was. What's the cost of
Lester.
lifetime? I honestly don't know the price, but I believe I think it's like if you do the $997, it's an extra $799. It's like about $1,800 all in for lifetime.
Yeah.
Roughly speaking, somewhere in there. So again, it's a pretty sweet deal.
Yeah. So if anyone is still waiting to get in, Dion just posted there. If you guys are still waiting, you're not locked in. It would be great to have your name now so that we know who to officially save that discount spot for, so that if we do raise the price, we have you locked and loaded. Just 100% make sure that you're in, because obviously we want to honor everyone who is in here today asking questions and all that stuff. So if you are still waiting, you can just pop something in here now so we have you on our official list.
Cool. RV says it's lifetime, or it's $799 for the base membership, extra $995 for lifetime.
Okay,
Awesome.
Linda's still waiting for lifetime, sounds like.
Linda, post your name, email, and phone number in here. We'll make sure you can get that lifetime. Some people actually did mention earlier they signed up for the 1 year, didn't see the lifetime. If that's you, guys, or just give us a call. Do yourselves a favor. Give us a call, 904-706-3537. 37. I believe the phones should have slowed down by now where they can take your call. But I do have to jump off. It's 12:09. I promised everyone that the alert goes out around noon. So I got to get that out now or I'm going to be a little bit late on that. But if you don't mind holding down the fort here for the last few questions, that would be great.
Yep, I'll hang tight. You get the alert out, guys. Make sure you're in before that alert comes out. It is timely. You guys have a little bit of time to get in. It's not like if you don't get in the first minute that you're going to be out in trouble or anything. But obviously, you want to jump in, get inside the portal there, and be ready for when that alert comes out. I'll hang tight here for a couple more minutes if you have any final questions. But it's been a lot of fun. Like I said, it was awesome to kind of lead up and build up to this with a lot of the content and education we were doing around profit factor and the math behind the systematic trading. So I hope that was really valuable for you guys to kind of get the behind the scenes of what was going on and then see the system in action today that we were kind of building up because Graham's done an incredible job. And obviously, when it comes to something like track record and systematic trading and all of that, it's great for us to be able to show you a real money track record and not just, a theoretical, because we talked about the theoretical of how you could build up, how you could recycle profits more quickly and all that kind of stuff. And we wanted to get into the real money opportunity. And so using that track record, I thought was a cool way to kind of slam dunk the reality of that today. So hopefully that was helpful and gave you a more practical understanding of exactly how all that stuff works. $17.94, Dorley said, for lifetime access. So for less than the usual price of what it used to be, you can lock in lifetime. We will be making some decisions on what we do there because we kind of got an onslaught today, which is great. We don't mind. Filled up faster than we expected. That happens sometimes. It's always a good thing. We're happy to take on more people and figure it all out. So always a good problem to have.
Okay, folks, we're going to stop it there, and I'm going to just pick up live here and talk about this program a little bit. So we've got a number of questions for people that said that they already own VIP of something and they're not sure if they have this or whatever. First of all, you can call the phone number on your screen to speak to a sales agent, and they will be able to look up and see exactly what you have. We do have different names for different things, and so we started off this presentation talking about dollar options. Dollar options are what we're buying with the perfect income trade alerts. It's basically the name of the promotion that we did. So perfect income trade alerts is the same program as penny options that we talked about at the beginning of the presentation. And the price for the perfect income trade alerts is $7.99 for 1 year or $9.99 for 2 years. So if you go online, you can pick either 1 year for $7.99 or get a second year for an extra $200 for $9.99. And then on the second page of the online order form process, you have the opportunity to upgrade to the VIP, which is the lifetime membership to perfect income trade alerts. And that brings the total price, regardless of whether you bought the 1 year or the 2 year at the first step, it's the same price to get to the VIP all in, 1784 all in on the VIP. So it's just the difference between what you paid on the first step and that VIP price is what you pay in the second step. So if you pay 200 more for the 2 year, you get 200 off the VIP upgrade. So everybody's paying the same price for VIP no matter what they did in the first step, or if you do it over the phone. The only difference over the phone is that you can do it all in one step. If you call and say you want the VIP, they're not going to charge you $7.99 and then an upgrade fee. They're just going to charge you that $17.84 for the VIP. But everybody's paying the same price, whether you buy the 1 year or the 2 year first, or whether you do it over the phone in one step. The VIP is the same price either way. With the VIP, the advantages of that are you'll never have to pay a renewal fee again. You're obviously getting the best value, the cheapest per year of the program, because you're paying basically for about 2 years of it roughly at even at the discounted price, you're paying less than 1 year retail and you're getting it for lifetime. So you're getting the best value. And I'm not sure if they even mentioned this, but the one advantage that you can only get with our VIP lifetime programs is that It's transferable to another person. So if you decide to stop trading or you want to leave it to somebody in your will for when you pass on, this program can be transferred to another person if you have the VIP. None of our other like term limit, 1 year, 2 year, 3 year programs are transferable, only the VIPs. So hopefully that clears a little bit of that up. And of course, if you're having trouble getting through on the phone and you don't want to buy online, you want to speak to somebody, you can give your name and phone number in the chat, and we will have an agent reach out to you as soon as the phones quiet down. Now, I already have phone numbers from a few people. If you did it already, you don't need to send it in again. If you haven't gotten a call, don't worry about it. The phones are still very busy. So, uh, if you're trying to get through on the phone and you haven't given me your phone number yet, you can do that, name and phone number. We'll make sure somebody reaches out to you and you get in on the webinar discount pricing. Let me see if any other Oh, so the other thing with the VIP is that the VIP is specific to a program. So if you have VIP of one of Graham's other programs, that doesn't mean anything for the Perfect Income Trade Alerts. It just means that, if you have Perfect Apple Trader or you have one of his other programs, you upgraded that program from, let's say, a 1 year or 2 year to a lifetime of that program, but it doesn't give you access to Perfect Income Trade Alerts. If you have the Diamond Club, if you're a Diamond member, for Graham, then that gives you access to this program and you shouldn't buy it. It should be accessible already in the members area. If you don't see it, please contact customer support. You go to the members area of whatever program you're in, go to the help tab on the members area, and you can either email or call in support and tell them that you're a diamond member, but you don't see perfect income trades in your members area. So just some of the terminology gets a little confusing. VIP is a lifetime membership to a specific program. Diamond is a membership to all of the programs for a particular trader. So you could be Diamond Club member for Graham. You should have access to all of Graham's programs automatically. If you're a Diamond Club member for Nathan, then you would have all of Nathan's programs automatically. Being Diamond Club for one trader doesn't make you Diamond Club for another trader. So you would have to be a Diamond Club member for Graham to have automatic access to Perfect Income Trade Alerts. Hopefully that clears all of that up. Let's see. If you're not sure about your memberships, please contact support. Again, that information's in the members area for whatever you have access to, and they will help clarify. Or if you're just having trouble getting into the members area and you just don't know what's going on, call the number on your screen and they will help you or transfer you to somebody who can help you. So someone said they're a member of Prosperity Pub already. So Prosperity Pub is kind of an umbrella brand for some of our traders, such as Nathan and Graham. You don't really become a member of Prosperity Pub, umbrella. You become a member of a particular program or a particular trader within Prosperity Pub. So if, for example, yesterday you bought something from Nathan, then yes, you're a member of Prosperity Pub because Nathan is part of Prosperity Pub. If you've bought something from Graham, you're a member of one of Graham's programs or one of the other several traders that are part of Prosperity Pub, then yes, you're a member of Prosperity Pub. That doesn't really give you access to anything other than what you bought a membership for. So if you're really not sure about your memberships, please give support a call or an email, and they'll help clarify all of that for you. All right, I think this is going to be our last pitch for getting in on this today, and then we're going to close this out. It's about 12:30, and we've been running for about an hour and a half on just the perfect income trade alerts, which is kind of where we tap out and say that's about as much time as we can spend on it. So if you would like a phone call from our sales team and you haven't already given us your name and phone number, please put it in the chat right now. If you would like to see a replay of this presentation, see the whole thing over again, you can go ahead and put your name and email in the chat right now, and we will send an email out with a link to the replay. However, I don't know exactly when that replay is going to come out. It should come out today. You should get a link today, I would think. But just keep in mind, if we don't have your name and phone number, then we don't really know you were here and doesn't really lock in your spot. So we're happy to send a replay out, but we don't necessarily, just because we have your email address, doesn't necessarily mean we identified you as part of the webinar here. So if you want to lock in your spot, we need your name and phone number in order to do that. All right. Again, Dario, as far as who you could talk about your overall memberships to, contact support is the best place to go. In the members area, you can click on the help and there's the information for contacting support. Doesn't matter which program you do it from, they'll be able to give you information on all of your programs. So whatever program you have access to in the members area, go ahead to the support tab, contact support, say you'd like to get a summary of all of your memberships. They have no problem emailing that to you or giving that to you over the phone. If you're having trouble getting into the members area and you need help with that, call the phone number on the screen. The sales team will be able to transfer you over to a support agent. All right, let's see. All right, Bill, yep, got your info. Kermit, Don, Dale, Brent. I see everybody coming in. If I didn't call your name out individually, don't worry about it. There's a lot of there are a lot of messages with emails and phone numbers coming through. We'll grab all that, make sure we get all that out to our teams and have them either email or call you as appropriate today. So we want to thank you for spending your time with us from opening Playbook into this presentation. And of course, opening Playbook will be back tomorrow at 10 a.m. Same bat time, same bat channel. And we'll see you then. All right. Thanks, folks. I see a couple more email addresses coming in. I'll give everybody a minute or two to get their information over to me so that we can make sure we got everybody covered. Let's see. If you're not familiar with Customer Service Live, let me mention that real quick. So for everybody who joins Perfect Income Trade Alerts, one of the advantages that you get, one of kind of like the value adds that is really extremely valuable in my opinion, is our Customer Service Live. If you're already a member of one of the programs and you're not taking advantage of Customer Service Live, you're missing out on some of the value of being a member. Customer Service Live is a webinar that our customer service team does every weekday from 10 a.m. to 1 p.m. Eastern Time. Except for holidays, it's 5 days a week, 3 hours a day, and you can get in whenever you want. You can hop in, you can hop out. You don't have to pay, you don't have to register, you don't have to tell anybody you're coming. And it's just like this, joining a webinar just like this, except what they're doing is they're doing demonstrations and answering people's questions for the whole 3 hours. So if you have a question, you've got support a few different ways. You can email support, you can call support, or you can go to CS Live if you are looking for help between 10 and 1 Eastern Time, Monday through Friday, and you can ask your question in Customer Service Live. Even if you don't have a question, keeping Customer Service Live kind of open and running every day is an opportunity to learn about things you might not even think to ask about, or to learn about other programs of ours that they are demonstrating. They could be other programs from Graham or Nate, or they could be programs from our other traders that you might not be familiar with. But they're also demoing things like how to use different features of the members area, how to do different things in your brokerage account, how to interpret trade alerts, how to read charts, all kinds of things about how to trade. And so it's really an incredible, like 15-hour a week opportunity. And of course, you don't have to be there for all of that, but whenever you tune in, most people will learn something by tuning in and watching for an hour. And so it's really pretty cool. And it's something that is included in all the memberships from any of Prosperity Pub or Trading Pub, Graham or Nate, or any of the other professional traders that are part of those groups. It's included in all the memberships of all their programs. And it's really an incredible added value that if you're not taking advantage of, I suggest you check out. If it's not for you, that's cool. And if you don't care, that's cool. But I think a lot of people will get a lot out of it. And I can tell you that we get emails on a daily basis from people who do attend saying how awesome it is. So and then also, I think every week we have a different trader doing guest spots in there. So you'll occasionally see Graham in there, you'll occasionally see Nathan in there. And it's another way to get FaceTime in a live environment with all of our traders. So really cool thing. Alrighty. I think everybody has had a chance to get their information in. We're going to call it a job well done here by Nathan and Graham. And thanks for joining us. Hope to see you in tomorrow's opening playbook. Have a great rest of your trading day.